Right, guys, welcome to our revision for test 3. So the question we are using, this is the last year's test 3, basically. It was assessment 7. It was their test 3 that they wrote last year. Or was it test 2? Yeah, between test 3 and 2. That was written last year, around the same time. I think this was just after this, like July, August, somewhere there. All right. So, and from the message I received from you guys as well, they said you should focus on unit 1 to 7. Right. This is a perfect question to work on. This will give you, the standard in which to expect in your test that is coming up. This is what was written last year, 2023. Again, I repeat, same topics around the same time. So I used this question to prepare us, all right? And I like the fact that it also fuses a lot of topics into one. Therefore, I mean, if somebody can really just understand this one in detail, at least they will have, should be ready to write. But this is not everything, guys. This is not everything. Please also go back to the previous revision that we did together, the questions we did together. Please also just go through everything else that we did in the past, okay? Especially the revision question that we did, the last revision we had. Please go through those questions as well. But this one, guys, this is a very good question to prepare yourself for the upcoming test. All right, like I said, guys, I want a very active class. It's a 4-hour class, so I really need you guys to be responsive, especially the calculation side. Guys, let's be, faster in calculations. Let's ask questions, all right, so that we have a good time. Okay, so this is our test. Like I said, this is the last year paper, right? It was written on the 8th of August. Okay, so it's basically around this time. Okay, we're already end of July, so it's around this time. This is really the test that we are talking about. All right, so it was out of 50 marks, a 90 minutes paper. All right, now what do you do when you get to the situation like this? You get your question, you go straight to the required. What am I required to do? Okay, so you have to really put a structure in your mind, in your head, that this is what I'm doing. So when you go to the scenario, you have an idea of what you're looking for. All right, so A says prepare all the relevant journal entries. Guys, I think I've said this before, journals is stuck with you, so please make peace with journals. Yes, please. All right, journals is really going to be there almost all the time. Almost every paper has some journal somewhere. Definitely coming in the exam, there's going to be journal somewhere. Okay, so every topic that you do, always look out for how the journals is affected, which journals are affected in every topic, because they can test it in every topic. Okay, right, so it says prepare all the relevant journal entries to correctly account for the debentures. So here we are talking about financial instruments, okay? To correctly account for the debentures in the accounting records of Masana Transport Limited on the 30 June 2023. Include applicable foreign exchange related journals. Ignore any text implication, and journal narrations are not required. Already here, if you have to put down the topics here, this one that talking about debentures here we are talking about financial instrument. So already one, financial instrument. Right, and then here, this one is talking about effect of foreign exchange transactions. I'm just going to write Forex. It's a whole topic, right? The effect of changes in foreign exchange transactions. So I'll call this topic 2. Already 2 topics are being tested here, but it's not basically everything. When you go deeper into the scenario, you'll see that you actually get to see more. So that's the whole idea. They want to fuse the topics together. Everything that you are learning, they want to be able to test it together. Okay. Right, that is the first thing we're doing. We're doing journals, and in this journal, we're dealing with debentures, financial instrument. Expect also a effect of changes in foreign exchange transaction. Right, and then we go to B. In B, it says disclose the following notes. So here we're dealing with notes, okay? In the annual financial statement of Masana Transport Limited, that's the name of the company, for the year ended 30 June 2023. Very important, all right? So my year end is 30 June 23. And then the notes they are talking about, let me use a different color. So we're doing non-current assets held for sale. This one, it's really loved. I think we've done several questions on non-current asset held for sale. All right, they love this one. The reason why they love this, they can fuse so many things. They can fuse PPE into this. They can fuse intangible assets into it. They can fuse investment property into this. All right. So already we're expecting a lot from this. Deferred tax is another one. Deferred tax can fuse any topic. All right. So with deferred tax, I say only relating. So the deferred tax must only relate to the contract with Zamalek or Limited, not every other thing. All right. So if we're listing our topics, already here, would say non-current, number 3, non-current asset held for sale, right? Which can fuse PPE. So I'll call this to 3, 4. This can fuse PPE. This can fuse intangible assets. Tangible assets. This can also fuse impairment loss or reversal. Okay, I'll just say impairment loss. That's the one we expect the most, but the reversal can also come. All right. Remember in our previous revision, we worked on the reversal or impairment loss reversal. Please remember, like I said, guys, also do go back to those. That revision is going to be very, very helpful for your upcoming test. Okay. Right, so these already are the topics that are fused here, and of course here tax. So 7, income tax. Right. Now the reason why I'm doing this is just to tell you that for you to pass, it's not enough for you to just read through the topics. You have to work through a question like this that combines those topics together. Now, if I can do at least 2 or 3 of these kind of questions, then I'm ready, because I know how it is tested, how they can be combined, how different topics can come together. All right, the standard in which they would normally ask it. So guys, the game is do as many questions as possible with understanding. If you are here and you're not practicing, then you're not going the right way. Okay, I'm going to be very honest with you. You have to do questions, many questions. Those question banks that you have, it's for you to practice. If you do so, you will definitely pass, because you get used to how the questioning is done, and it pushes you to know what you do not know. It pushes you to pick up your weakness, and then from there you now go work on your weakness. For example, a question on financial instruments is here, and you do not know financial instruments, but because you've seen the question and how they ask it, it pushes you to now go and work through financial instruments. All right, so please guys, the only solution to passing FAC is by doing questions. Okay, so that was the second one. The second one is disclose notes, and the notes is non-current asset held for sale and deferred tax. Right, then C, we now go down to C. C says critically discuss here, and the word critically means this discussion should be lengthy. All right, so when it says use the word critically, it means it must be lengthy. So don't just give us a one-line situation. No, we want a long discussion and detailed. So lengthy or detailed. So critically, it should be lengthy and detailed. Right. So this critically discuss whether the correction of error, and what are they looking for here? It's the correction of error note as prepared by the junior accountant of Masana Transport. Guys, I already told you where they mentioned junior accountant or inexperienced accountant expect problems. All right. So here they said, you are going to critically discuss whether the correction of error note as prepared by the junior accountant of Masana Transport Limited for the year ended 30 June 2023 is correct. So you are discussing whether it is correct. Let me use a different color. Is correct and complete. Right. So you are touching on correct, also touching on complete. Is it correct or is it complete? Now, if something is correct, also mention it. Remember here, the word here is critically discussed. So when I'm looking through the note, when I find something that is correct, I'm going to say this was correct according to correction of error note. This was correct. If it is incorrect, I should say this was incorrect. It should have, and then I must also suggest how should it be done. If it was correct, how should we then, if it was incorrect, how should we correct it? So you tell them the right thing to do. And if something was omitted, then you tell, okay, this was omitted from this note. They did not put this when they're supposed to, so it was incomplete because so and so was missing. Then tell us how should it be done, you know, like that. So in detail, okay. That is why it's 16 marks and there's a 1 mark for communication. Like I said, usually they usually just give this mark to everybody. Normally they just give it out. All right. So that's how it works. And then we continue. So it then says, please note the junior accountant correctly classified the lease with Dino. Okay, so they correctly classified the lease with Dino Motrans Limited as an operating lease. Okay. Where relevant, substantiate your critical discussion by stating the correct accounting treatment or disclose requirement as prescribed by the requirements of international financial reporting standards. Right, this is what I was saying. So if something is incorrect or omitted, then you need to come back and to tell us how should it be done, rather. How should this be done? But in reference to AFRES, of course. Okay, in reference to the standards. Right. Then it says, you do not have to include corrected calculations. All right. You don't have to calculate. They don't need calculation here. Just tell us what was supposed to be done. You don't need to calculate things. Okay. Then it also said, do not discuss the castings and the cross castings of the correction of error notes. Do not discuss the consequential effects of error identified. You don't have to tell us what is the consequence of something that is not done. Just tell us what to do. Okay. Then the last one is 3 marks. Like I said, this one is usually given to everybody. This is usually general knowledge type of question. Every test will have something like that. Okay, so it says discuss any ethical concerns. Now, it's very important for accountants to understand ethics. Right, accountant should. Okay, guys, can you hear me clearly? Okay, Sam seems not to hear me well. Can you guys hear me clearly?
Yes, we can hear you clearly.
Okay, because
Yes, we can hear you clearly.
I've not heard any message about against my network here, Sam. Sam, I think it's your network, so you can leave and come back. Try leaving the meeting and come back again. All right, perfect. So, like I was saying, every accountant needs to understand ethics. All right, ethics are very important. So they will always ask you questions like that. So it says discuss any ethical concerns you may have regarding the proposal of the Chief Financial Officer of Masana Transport Limited regarding the non-payment of employee tax to the South African Revenue Service in terms of the SAICA Code of Professional Conduct and any other applicable legislation. So your answer should be based on the SAICA Code of Professional Conduct. Okay. It doesn't have to be exactly, you don't have to quote, you know, word by word, but just a general understanding of, you know, the ethical concerns that, you know, accountants and any person in the accountancy professional should have. All right. It should just make sense and it should be in line with what was done wrong. Okay. So when you are talking here, when you're raising ethical concerns, remember it must be aligned to the scenario. What actually went wrong? What did they do wrong and what should they do right? Okay, so don't just talk in general only. You use general knowledge, but basing it on the actual concern, the actual problem, the actual scenario. Okay, so this one, I usually don't do this one in class because everybody can just do this one. The last one, ethical concerns and whatnot, everyone can just do that. So I'm gonna focus on the principles that we actually have to work on. Right. So guys, this is always the best approach. Going down. Oh, let me even continue to add my topics. Where was I? Was in 7, right? So if you look at this one, para period era, para period. Okay, and of course, when you read further, you will see that you'll find more topics as we go. All right. So now that I have went through this, I have sort of prepared my mind. You see how I wrote even my topics. Of course, this you only do this in the revision. In the exam, you don't have time to write topics like this. Don't do that. You don't have this kind of time. But when you're practicing, when you're preparing, you can do this, okay? You can do this to break it down to know, okay, you know what? I do not know PPE. So let me really start by understanding PPE before I can continue, okay? So this will actually help you in that sense. Yeah, but in the exam, you don't have this time. So the reason why we go through the required first is to prepare my mind to look out for things. So if I know I'm working with, for example, financial instruments, I need to look out for how's my interest going to be calculated, how's my future value, my PMT, my all those things, because I know that's what I should expect from it. So when I'm reading my scenario, I have an idea what to see. All right. So once you're done with this stage, we now go to the scenario. Right. Before I even go to the scenario, I'm just going to come here and prepare my answering already. I repeat, guys, this is the test that was written last year around this time. All right, around this time, this was their test 3, if you have to put it like that. So this is a very good indication to prepare you for the test, the upcoming test. Okay, right. So let's continue. A. So what am I asked to do in A? I'm told to do journals, relevant journals. So already, I can come here and put the format of journals already. Okay, this also saves time in the exam. It's also a good approach. It's already saves time to know the key. Whatever I'll do here, I'm coming back to journals. Debits, credits. Right, let us go and read. And it's always good to also read the question twice. Remember, we heard everything down. Now I want to focus on this one, so I'm going to read it again. All right, the question says, prepare all the relevant, only the relevant, not everything, all the important journals, all the relevant general journal entries to correctly account for the debentures in the accounting records of Masana Transport Limited on 30 June 2023. Okay. Then include applicable foreign exchange related journals, if any, and ignore text implication and journal narrations are not required. So I'm focusing on the debenture transactions. So I'm going to go to my question where it talks about debenture. But before that, it's always good to understand the background or the nature of the business you're dealing with. Okay. What is this company all about? What do they do? How does it come in with every other thing? All right. So, Masana Transport Limited, that's the name of the company. Very important. I need to know this. So whenever they mention this, I should know that this is the company I am working with. Masana. All right. So, Masana Transport Limited, Masana is a transport and logistic company based in Kwake Tomtandayo. Yani Kwake Tomdandayo in KwaZulu-Natal. Masana has become one of the largest transportation and logistic companies in Southern Africa. So already the fact that they said Southern Africa, it means they're not only dealing in South Africa. Very important. So they are dealing internationally. I need to start thinking about foreign exchange transaction already. Okay, guys, that's the kind of mind you need, right? You need to have this kind of mind that thinks far. You think far and far and far and keep thinking far. All right. That's the mind we need for us to survive in accounting. Right, so let's continue. So Masana is listed on the Johannesburg Stock Exchange and has a 30 June, very important. It has a 30 June year end. Masana's presentation currency is Rand. Okay, so when they say ZAR, it means Rand, right? That's their presentation currency. This is already telling us because of this. We present our financial statement using Rand because we also deal internationally in different currencies. Okay, but when we present our financial statement, we use the Rand. Continuing, the following notes, the following relates to some of the transactions, assets, and liabilities of Masana for the year ended 30 June 2023. Debentures, this is where we're starting. That's where we're supposed to be, right? So it says on 1 July 2022, which is the beginning of the current year, Masana issued. Remember, if we are the one issuing, this is a liability. Okay, the company issuing will have a liability. The company purchasing, acquiring will have an asset. Right, so let's continue. On 1 July 2022, Masana issued 100,000 debentures in the Egyptian stock Let me put this in a different color. In the Egyptian Stock Exchange, not the South African Stock Exchange, but the Egyptian Stock Exchange. And remember, Masana is a South African company based in KwaZulu-Natal. Okay, right. So they are now trading in a different country. Right. So they issued 100,000 debentures in the Egyptian Stock Exchange for this Egyptian pounds, ne? For 4,300,000 Egyptian pound. That was the price. The debentures bore a fixed coupon rate. This is what we use for our PMT of 8% per annum, which is compounded annually. Masana paid, so we paid 172,000 Egyptian pounds transaction cost in cash. And on 1 July 2022, this was paid actually on 1 July 2022. Okay, then continuing. Right, the coupon interest rate is payable annually in arrears on the 30th of June. So we pay our coupon rates yearly at the end of the year. And the debentures are compulsory, redeemable on 30 June. It's gonna be redeemable. That's where the maturity dates. Okay, it's gonna be redeemable on 30 June 2027 for 60 Egyptian pound each. Okay, 60 Egyptian pounds each. Now that means the price at the beginning and at the end is not the same. Okay, so we have to check. This one becomes my future value because that's the price, that's the maturity price. Then it says, these are the only debentures issued by Masana. They were issued with the intent to raise funds and not to make any short-term profit. Already, this is for capital appreciation, if I put it that way. Basically, they wanted to raise funds. Then it says, the accountant has determined that the fair value of the debentures do not provide any more relevant information, nor does it prevent any accounting mismatch. The debentures are Egyptian pounds denominated, okay? And all transactions related to the issued debentures are settled in Egyptian pounds. That is why they're busy putting EGP for us instead of rand. Okay, it's Egyptian pounds denominated. The following dates and exchange rates are applicable. So we have at the beginning of the year, it's 58 cents per Egyptian pound. So 1 Egyptian pound is equal to 58 cents in rand. Ne? And then at 30 June, which is year end, is now 52 cents. Then the average. This average, I think we've done a question like this before. And the average exchange rate is used to calculate interest. This is used to calculate interest. Okay, like I said, we've done something like this before. But yeah, in case you've missed it, please remember, this is usually used to calculate interest. So that has been all my information that I can account for, right? That is all my information that I can account for. And okay, so then we get into the actual work. All right. So if I start this at the beginning, 1 July 2022. Right. Remember, always date your journals, right? It makes so much sense when you date your journals. Okay. So then, this is what will happen. Remember, this is a liability because we issued. And we are told that liabilities should be measured at amortized cost unless the company wants to measure it at fair value through profit and loss. But it should be measured at amortized cost. As you can see here, every pointer is going through to amortized cost for a liability name. So we're using amortized cost. That means I have to calculate my interest, I have to use my PMT to get my balance and all of those stories. Okay. So initially we issued, so that means we received money. We even told that it was issued for 4,300,000, but we also had to pay for transaction cost as well, right? So money did come in. We received money, bank, on this date, and we are going to also account for the liability, debentures. All right, so then how much was received and how should this be accounted for? Now remember, the money was received and whatever paid on the 1st of July 2022. At this point in time, my exchange rate was 58 cents per Egyptian pounds. All right, so let's do the calculation. So we paid 4.3 million. So when you come here, we'll say, let me just do my calculation here. So Egyptian pound, 4.3 million. This is what was paid. This minus, this is what we received, but we had to also pay transaction cost of 172,000. Okay, so what we do is we have to actually remove this from the total value. So 172,000. So this is also Egyptian, what pound, 172,000. Okay, and then this, we multiplying this and this 8. So still, let me write properly so that people can see clearly what I'm writing. Let me just make space with my, right. So Egyptian pound, 4.3 million minus Egyptian pound, 172,000. Right, this we multiply by the transaction spot rates, 58. Okay, and we close, guys. Remember what I said? I needed people to help me with the calculator so we can be fast. All right. And also just double check the figures as well. Make sure we have everything right so we can focus more on the principal. Right, so if I do this, multiply by 58, this is how much I'm getting in the beginning. Please confirm the amounts. So I'm getting 2,039,440.
You are correct.
Perfect. Thank you. So this is the beginning. All right, this is what we have in the beginning. Now I want to get to 30 June. I want to get to 30 June 2023. This is now by year end. Now to get there, I need to do some calculations, which I need to get my interest. I need to be able to calculate my interest. Remember, time passed and also payment was made. So we need to do those calculations. I'm going to do this on the side. I'm just going to label calculations here. Calculations. Okay, number one, I want to calculate interest. But if you go through this information, they gave me everything except the interest rate. I do not have the interest rate. So I need to start off by calculating my inputs. So guys, you need to have a financial calculator. If you don't have a financial calculator here, I don't know, guys, that's not good. I don't know how you're going to survive, but you need one, okay? Please get one as soon as possible. So we start off with our calculating interest, effective interest calculation. That's what they will call it. Effective interest rate calculation. Right. Starting, we're going to have our inputs, N, which stands for period. We're going to have our PMT, which is usually our fair value. And then we're going to have our future value. Future value, sometimes it's paid at premium, sometimes it comes back, it depends on what they're giving you, okay? Sometimes they say the nominal value, face value, whatever it is, that becomes the future value. Or they'll give you the price that it is. Then, so this was PMT. PV is what I was saying. This is the fair value, and we are looking for IY. So I'm going to comp IY. Right. So let's go back. Let's get our periods and all that. So we started on July 22, and we said it's going to be redeemed on June 27. So what are we saying exactly? 1 July 22 will end on 30 June 23. So if I continue, 30 June 24, 30 June 25, 30 June 26, 30 June 27. That's when it's going to be redeemed. So it means 1, 2, 3, 4, 5. So it took us 5 years. Okay, so I can come here. Please do stop me if you feel confused. So I can come on my period and put 5. Right. Then for me to get my PMT, I need to know how much did it cost us. I think we calculated that one earlier. So every transaction, remember what I said here. It says the debentures are Egyptian pound denominated. So I'm going to do every transaction using Egyptian pounds. I'm only going to change it to rands later, né? So it doesn't get to confuse me. Okay. I'll change it to rand later because everything else that is put here is based on Egyptian pounds. Right. So we said we issued 100,000 debentures for 4.3 million and paid also transaction cost 4.3 million. So that will be my present value, right? The 4.3 million, that's the present value. But remember, we also pay transaction cost of 172,000. That's what we did here, even in our first journal. Okay, so 4.3 minus 172. So this gives me 4,128,000. Okay. Then my future value, it says that the debentures are compulsory redeemable on 30 June 2027 and for 60 Egyptian pound each. So now this is showing that this was redeemed at premium. So I'm gonna have to recalculate using the debentures. I had 100,000 debentures. That's my future value name. I had 100,000 debentures. If I multiply this by the Egyptian pound, which 60 Egyptian pound each, this will give me, calculate, 100,000 times 60, that will give me 6 million. Okay, so it was actually redeemed at premium. Then my PMT, I'm going to use the value of what was we used to pay. Okay, so we use what we used to pay was 4.3. That is what I will use to be able to calculate my PMT. Please take note. Paid 4.3. Take note of that, guys. Take note of that. Or rather, the fair value, whatever the case is. So it was 4.3 that costed or received. I don't know what we're saying. Pay. We received 4.3, and then we are told the coupon payment is 8% per annum. Okay, so 4.3 million multiplied by 8%. All right, this will give me, please also do the calculation along with me. This will give me 344,000. So I'm going to make my PV negative as an outflow. Otherwise, if you don't make your PV negative, you are not going to get a correct amount. You're going to get an error, né? So between your future value and PV, one of them should be negative, but I make my PV negative, treating it as an outflow. Okay. So do we have any questions so far? Do we all understand how I got here? Please take note. I'm busy.
Hi, Nome.
Yes.
Can I take you back to the transaction costs?
Yes.
Why were they minused from the full value of 4.3? Why are we deducting the transaction costs?
Okay.
What information? Okay.
Okay, basically it's principal, né? It's principal. So when you're dealing with a liability using amortized cost, all right, you can just go back to the note. I think I've given this note when you did financial instruments. When a liability is accounted for using amortized cost, we need to basically minus the transaction cost. Okay, the transaction cost must be minused from the fair value.
Okay,
Yeah, it's principal, ne?
correct.
Okay.
Thank you.
You're welcome.
Naomi,
Yes.
how do we determine that the redemption price it's redeemed at premium?
Okay. Premium just means more than what we're owing. If I have to put it like that, that's what premium means, ne?
Mm,
Yeah. So if
mm,
the price is more than, remember, this debenture that we issued was actually worth 4,300,000 Egyptian pound. Remember?
yes.
Yes. But when we are paying, when we have to pay back, we're actually going to pay back 6 million plus interest. This 6 million is not including
Mm,
interest. Plus interest, you
mm-hmm.
see. So when we're saying at premium, it means it's much more in value. Okay. Yes, Sam? Sam, I see you raised your hand. Sam, you are muted. Okay.
Yeah, no, I wanted the screen. Thank you. Thank you. I wanted the screen. Please freeze here for like a minute.
All right. Okay, so I wanted to say, please take notes that everything I'm working on is on Egyptian pounds. Okay, it makes life easier. Imagine if I had to be changing everything to rand as I'm busy now. It's better for me to get the interest, and when I need, I'm gonna just change at the end. Let's say I've now calculated my interest, and then I can then multiply by whatever foreign exchange rate, and then I'm done. Okay, instead of me changing line by line to rand, line by line to rand, it's gonna make the calculation much more complicated, and that's where we waste a lot of time. Okay, so always go with the best alternative. It is gonna give us the correct answer. However, always go with the best alternative. Okay, because at this point in time, I'm looking for an interest rate, so I can use anything, but don't mix them. Please don't mix them. You cannot have, for example, my PMT is in rand and my future value is in Egyptian pound. That is already wrong. So if I'm going to use Egyptian pounds, I'm going to use Egyptian pounds throughout. If I'm going to use rand, I'm going to use rand throughout. But it has to be the same. I cannot mix them. All right. Yes, Sam. Or was this the same hand that was up? Or are you raising your hand? Okay, Sam is quiet. Okay, I'll continue. Right. So where we are now, everybody should be able to get the answer. I'm actually going to wait for you guys to get this
No,
answer.
Naomi. Naomi, hi.
Yes. Yes?
Hallelujah. Oh, no, finally, another sound. Naomi, can I ask, genuinely, it's an honest ask. Now I'm asking for a friend. How do I do this comp I over Y thing using HP? I'm asking for a friend.
HP, I think HP is actually easy. You don't comp. There's no compute. You just go straight to IY. So you put your input, you put your 5N,
Yeah, the
whatever.
thing,
Sorry?
it says no solution.
Okay, another thing is what
There is no
HP.
solution.
What HP does is you have to change also the period, because most of them they come with a monthly calculation. So
Man.
there's a way you should change that
The what?
PY. There's a what you call PY. The period. Your period should say 1, should equal 1, not 12.
Wait. In simple English, please.
That's the simplest English. Sam, I'm talking about the calculator. You need to look at the calculator, ne? Okay, I don't have what is it called?
It's not.
Out of me right now, so I won't be able to talk well
What,
because I'm not
you know
looking at it.
no.
But what happens with HP, with the
Okay,
HP calculator is you must
sorry.
change
It's
first the,
fine. Continue.
are you fine?
No, like I'm lost, and what makes it worse is that I can't hear you. It's like you're breaking, and then you come back, and then you go mute, then you come back, and then it's yeah. I
Okay,
don't
but you
know.
know
It's
what, Sam? Let me talk to you rather separately about the HP calculator then. Can
all
you
right.
hear me?
Yes, yes, we can.
Okay, please let's talk about
I'll
it
just,
then later since it's doing like that, so that we don't take a lot of time in it.
yeah, I'll just read the yes, I'll just read the captions for now.
Okay, cool. Okay, like I was saying, guys, this I'm using Sharp calculator. So with Sharp, you have to compute before you get the answer. People that are using HP, there is no compute. You just go straight to IY after your last input. You just press IY to give you the answer. But the catch with HP is that you have to change the period because it normally comes with a monthly period. So you have to change that period. Also, you guys can also use Google. You can also use YouTube to help you with how to maneuver around your calculator, especially HP. You can use Google and YouTube. Then you maneuver around. It's very important that you understand your calculator in depth. Ne? All right, Katlego, yes, Katlego.
Yeah. Uh, I want to understand
Yes.
on your PMT because
Mm,
in most cases we are using, maybe we used framework, you might provide more clarity.
okay.
When we are calculating PMT, we usually take the amount of future value,
Yes.
which is 6 million times 8%. So this time around you used 4,300,000. So I'm getting a little bit confused there.
Okay. Right. Thank you very much for that question. That's a very good question. So the reason why we are not using this one is because the price has gone higher of the future value. Okay. So the nominal value is basically what is it called? The coupon rate. The coupon rate is usually based on the nominal value or the face value that is given. All right, in the question. So I think it would be best for me to show you a question like that, but I think we have done it before, or we have seen it before. We have done it before, actually, a question like that. So normally they will give us the nominal value or the par value, and that's what we use. That is actually the value of the investment or the liability, whatever the case is. That's what we usually use for our coupon rate calculation. But in a situation where the value is now redeemed at a higher price, we will not use that one. We will use the price of the debenture in this case. So the price of this debenture was 4.3. That's the price of it. But now when you are redeeming, it's being redeemed at a premium. That's why I was using the word premium. It's being redeemed at a premium at a higher price, like more like a profit or something. That is why we cannot use that value for our calculation. But in a situation where it is not redeemed at a premium, then we'll just simply use that nominal value, par value, which is our future value, to calculate our PMT. Okay, so the catch here
Okay.
is because of the premium.
Okay, so if we have a situation where the par value and the face value are different, that's where we are not going to use our future value to determine our PMT.
Yes, I could put it like that, but rather go. I think the wording that you said the face value and the par value is different. That's what you said.
Yes, because of
Okay.
usually they are giving us a par value and face value. They are the same in most
That's what I'm
cases.
saying. So the wording is the problem. I understand what you're saying. The face value is not the face value and the par value that's the problem here. Is the redemption amount. Okay. So in a situation where my redemption amount is different to my face value or my par value, then
Yes.
I'm rather going to base my coupon rate calculation on my face value or my par value and not the redemption value.
Okay.
Are we together? Yes. So like I said, I understand what you are saying. Actually, I'm confirming what you're saying, but just that you're using the wrong wordings. Yeah? Okay. I hope you're good. Who has calculated the interest?
Naomi, it gives me 15.05%.
Okay, perfect. Okay. Another thing is, I'm also getting that. Another thing is you must always check your, what do they want? How many decimals? They didn't mention, right? Okay, let's say they didn't mention. They said, please note your answer must comply with requirements of International Financial Reporting Standards. Round all calculation to nearest rand. Comparative amounts are not required. Accounting policy are not required. So they don't really talk about decimals. Okay, I'm just gonna use the 2. Guys, it's always safe when you are doing when it is a percentage, it's better to go for 4 decimal places, né? So that your amount is not very far from the answer. But usually they're supposed to tell you how many decimal places you use for a percentage, for a percentage, or for a value, a total value. For a total value, they did say we must round it off to the nearest rand, so we are good. But here we are dealing with the percentage. Okay, so in cases where they are silent like that, just use 4 decimal places. All right, you guys know how to change your decimals, right? You can change them to 4 decimal places. So if you're using sharp, it is okay, it's set up, right? Then you press 0, you press another 0, and then you put how many decimal places you want. In this case, 4. So you press 4, and you see it to become 4 decimal places. Okay, especially when the question is silent, so that your final answer must not be too far from the value that they will get, okay, if they are silent. But if they do tell you how many decimal places to use, then just simply apply the decimal places that is being given. PV, comp. Okay, so if you do this in 4 decimal place, I'm getting 15.0523. Okay, this way it's safer because I'm still going to use this value later on to do my calculation further. All right. Okay, who is with me? Who is lost at this point in time? Please speak before we move. Were we all able to get our interest? Who did not get the interest rate? Or should I say who did not get it correctly?
I also didn't get it correct. It says no solution. I don't know what.
Which calculator?
HP.
Okay, so it's the HP, yeah?
Yeah.
Who has HP and is able to get the answer right in this class? Who's using
It's
HP and
HP.
got? Is there anybody in this class who has HP and did not get and got the answer?
Yes, I did.
Please explain how you got it.
It's not make sure.
It's
No one.
either they have to put a negative on the PV or PMT and future value. If they choosing to put a negative on PV, they have to put a negative on future value. And or they can put a negative on PV only. And then everything remains the same.
So what are the steps you took? Can you just take us through the steps?
It's 5 and then N. And then 3, 4, 4, 1, 2, 3, 0. PMT. And then 6 million, and then future value, and then 4128 3 zeros negative PV I.
Then you just
That's how
press
you
I,
do
ne?
it.
Then you get the answer.
Yes.
I think that's what I was also
Yes.
saying as well. But guys, do check your settings. Or one thing I've noticed with HP is that sometimes it's the setting, especially of the periods. So you may get even the answer, but it may be wrong. So just do what Sam, please just do what she said. Try it and see if it's if it works now. Please try it. Let us know.
Naomi,
Yes.
Naomi, yeah. As she was explained, wait, which SEM are you talking about?
There's two
Because
of
there's two
you. There
SEMs.
are two SEMs that are having the same issue.
Yeah, you see, two SEMs are struggling with HP. So you see, it's not a me problem. It's two SEMs are struggling. But anyway, I did what she was, but it's not make sure. It's still saying no solutions. Wrong something is here.
But Naomi, I
Yes.
think now we are taking much time on HP while it's not part of your work. So
Yeah.
we need to make sure that we move on.
Katlevo. Okay, sorry. Katlevo says it's not part of. Okay. So I think
Naomi,
that was well said. Yes.
I think I missed something, man. Like on how we calculated the years to 5 years. Where in the information did they tell us that?
Yeah, I didn't hear anything there.
Okay, it's here, né? Let me go back there. Okay, before I go, guys, the HP people, let's talk separately after class so that we don't have to stay here to talking about HP when there's a lot of work, né? And there's a test. Okay. Alternatively, guys, there's Google. You can get everything on Google. You can Google everything you want right now. How to calculate PV, how to calculate what using HP. Google will give you the steps. It's actually faster that way. You could also use your manual on the I even say laptop, on the calculator. When you buy a calculator, it comes with a manual. The manual takes you through the steps of how to do everything, how to calculate your PV, how to calculate your IY, how to do your amortization table, everything. It's also there. Okay. So, but anyways, I am free to help out of the class so that we don't spend a lot of time there. Yeah? Right. And then let me come back to the period. So they said on 1 July 2022, Masana issued 100,000 debentures. So this is the beginning. Okay. This is my starting point. Right. And then later on they said, where was I? The debentures are compulsory redeemable on 30 June 2027. So this is the day it's going to be redeemed. So I'm counting from here to here. All right.
Okay.
So
Thank you,
yeah,
Naomi.
you're welcome. This is where I did the breakdown, eh? Just in case you want to do the breakdown, this is where I did the breakdown. Okay, guys, we've got a lot to do and time is flying. So let's move on. So this is how we calculated our interest rates. We only calculated the rate. And the rate, we cannot use the rate in our journal. Remember, we're busy with journal. So it's not the rate I'm looking for, it's the actual value I'm looking for. Okay, so what now I need to do is to calculate the actual interest, all right, on the value that is being owed, which is this. Remember, this value. But I'm going to use the Egyptian pound and then change it to rand, because with interest, we use the average rate. I think I explained it when I was here. The average exchange rate is used to calculate interest rates. It's used basically interest to calculate interest. So this is what I'm going to do. My value of how much it was here. So it was 4.3 minus 172, this value, this one. So 4128, this is how much it was worth. All right, the debenture. And then I'm going to use the interest rate, which we calculated, which is 15.0523%. So this I would have calculated, remember, this is in Egyptian pounds. I would have calculated my interest in Egyptian pounds. Then I will then multiply this by the average exchange rate, which is used to calculate my interest. So in this situation, it is 0.64 cents. And then I'll be able to get my rand value. So that will be my interest. So this here, I'm calculating my interest. All right. So it has been a full year. So if I say multiply by 12 over 12, it's the same as just not saying anything. It's for the whole year. So 4,128,000 multiplied by 15 0.0523%. Or you can do this in decimal, guys. Always change things to decimal. So it will be 0.150523. All right. Then multiply by 0.64. So I'm able to get my rand value. Please confirm this figure. So I'm getting 397,000. I'm getting basically 670. If I round it off, it's going to give me 670. All right, so this is what I was talking about now. Because of the rounding difference, because of the rounding difference that is here, it may, rounding difference, your answer may not be exactly what they want. So that is why normally in the test or exam, they have to tell you how many places you should round it off to. Okay, but if they are silent, then they will take it as it is. They will give you your mark 100% because they did not tell you how many decimal places you should use. Okay, so nobody should worry about that. All right, so basically that's my interest. And then we go on. So I can now account for my interest, right? This, I am the one who has to pay. So it is a expense on my side. So it's going to be a finance cost. Or you can say interest on debentures, whichever. Okay, and then this is obviously going to increase my debenture liabilities. Right, we just calculated the figure is 397,670. Are you guys getting the same figure? Please confirm.
Yes, we do.
Perfect. Right, and please remember to cross-reference. Even when I use this, I must also cross-reference this so that they can mark how I got to the figure. Okay, so we got our interest. And then remember, there's also payments that we have to make. We have to make a payment, the coupon rate of 8%. All right, we have to make our payments at the end of the year. All right, so we're gonna have to calculate our payments. It's going to be as follows. So calculation number 3. Right, so my figure here, I can just use the one we already calculated here. So here in Egyptian pounds, it's going to be 344,000. Okay, it's going to be 344,000, and then I'm going to multiply this by the exchange rate at the end at 30 June. Remember, this is not an interest anymore. We use the average interest rates on the average foreign exchange on interest, but this one we're going to use the one at the end of the year. Let me erase this so we can see these things clearly. Right. So we are now at 30 June.
Naomi,
Yes. Yes.
sorry to disturb you and to take you back.
Mm.
The 15.05, it's the I for what? When we were determining the 15.05%.
It's the interest rate. I don't understand the question. Please rephrase your question.
The interest rate that we calculated, which is 15.05
Yes.
to 3.
Mm-hmm.
I get you said the 0.64, the average exchange rate is what we use to determine the
interest
finance
amount.
cost. So
Yes.
yes. So my question is, where does the 15.05 come in?
Okay. 15.05 is the interest rate. Is the rate you use to calculate interest. Then 64 cents
It is in
is the exchange.
the exchange rate. Also, we basically converting it to our currency.
Yes. That is why I'm including this in the beginning. I'm saying Egyptian.
Okay.
Yes. I'm putting this just so that we can see what I'm dealing with.
Okay, thank you.
Yeah, you're right.
Okay, I understand now. Thank you.
All right, you're welcome. Okay, so at 30 June, I'm now looking at the payments. Let me just write here. This one I wrote interest. Here I'm going to write payments or the coupon rate. Right. So my payments, this is the figure. We calculated 8% out of the debenture value. And then this now we want to change this to the rent value. Now, this is not an interest, it's the payment amount. Therefore, I'm going to use the exchange rate at year end, which is my year end here, 30 June 2023, right, which is 52 cents. So I'm going to come here. I'm going to multiply this by 52 cents. All right. And then I'll get my value from there. Okay, so I'm getting in rand now, I'm getting 178,880. That's my rent value. Please confirm if you're getting the same.
Yes, it's correct.
It's correct.
Right, so this is paid. Now we are no longer owing the full amount because we paid a portion, okay? So what's going to happen here, I'm still at 30 June. So what's going to happen here is that my debenture is going to decrease. Remember, it's a liability. Liability decrease on the debit side. So I'm going to debit my debenture because I'm no longer owing the full amount, okay? I'm going to debit it with that amount, 178,880. This is coming from calculation 3. And of course, money left the bank to pay. So my bank balance will decrease with 178,880. All right. So far we dealt with our interest, we dealt with our payments, but then we have a problem here. Foreign exchange transactions. Now, the issue here is that the foreign exchange transaction changed the export rate. The export rate was not stable. It changed. It moved from 0.58 to 0.52. And of course, we have to take effect of the interest section of it as well. So I need to calculate my either foreign exchange gain or foreign exchange loss. So how do we do this? Let me just do the timeline before I even move on there. So I'm going to call this calculation number 4. Calculation number 4, this is my effect of changes in foreign exchange transaction. Okay, that's basically what is happening here. So if I put my timeline, I have something like this. On 1 July 22, this is where I had my transaction date. Okay, that is when the debentures were issued. That was my transaction date. This is my year end. 30 June 23 is my year end. All right, so in between, remember we are still owing, so we're still continuing until 2027, we're still owing. So because we are still owing, what will happen here, there will be a translation. All right, so when I get to year end or when I get to payment date, which has not happened, okay, of course, only that small portion. Right, when I get to year end, I need to now translate to know how much, all right, how has the foreign exchange rates affecting the value of this debenture. Okay, so if we check here in the beginning here, it was 58 cents per Egyptian pounds. All right, and then when you get here now, it is now 52 rands per Egyptian pounds. Okay, right, these were the values, and the average value is used for the interest calculation. So this is what we are going to do. We are going to calculate this, the foreign exchange. We have to calculate this to see how much has improved Has it gone down or has it gone up? We're usually going to use the balance to be able to calculate that. Please follow how I do this, guys. Remember, calculation can be done in multiple ways, okay? This is not the only thing. You can think out of the box, right? This is just what I'm going to present to you, but that does not mean this is the only way one must always do the calculation. It must make sense to you. That's the reason why you can see I did my timeline. Okay, whenever you want to do any calculation, it has to make sense. What you are doing must make sense. All right. So this is what I want to do. Let me do this way. I'm going to start with my balance. Okay, I'm going to start with my balance. All right. So initially, if you check initially, I accounted for my my Egyptian. Where is it? There's it. So the value was 4,128,000. 4 million Egyptian pounds. 4,128,000 Egyptian pounds. All right. I'm going to multiply this by the difference. The difference between now, which is 52 and 58. So I'm just going to start with the bigger one. Minus. All right. So this will give me the foreign exchange difference. Let me write it somewhere. Foreign exchange difference. Exchange difference. Right. So I'll find the difference in between. 58 minus 52 multiplied by 4,128,000. Okay, so this has now moved to 2,474. No, not 2 million. 247,680. Please confirm the figure. Right, so this was my balance.
Correct.
Okay, this is my initial balance. If I have to compare my initial balance, how it has changed, I will use that figure to actually get my initial balance, how it was changed. Then I must also check the effect of this on the interest. Effect on interest. So the effect on interest will be as follows. We start again with our interest calculation, just like we're doing in the beginning. So Egyptian pounds 4,128,000. We multiply this by, I think we did that calculation already, 15.05223%. This will still be in Egyptian pounds. All right, so that one, this one would have still been just to get my interest in Egyptian pounds. And then I want to calculate the difference now and check how different this one is. Remember here we use 64. We use the average 64, and now it is 52. Now it is 52. Here I use the average. Let me just write it also so that somebody does not get confused. This one, usually on interest, we use the average. Okay. And now I'll be able to get the difference. All right. So I would say 4,128,000 multiplied by 15.0523%. Okay, then I'll take that value, multiply by the difference between 0.64 minus 0.52. All right, and I'm getting, please confirm as well, I'm getting, let me put this in blue. I'm getting 74,563. All right, so this one from the balance, this one from the interest. So when I add them together, it gives me the foreign exchange difference.
Yeah, it's correct.
Okay, perfect. So this will then become my difference. Right. I'm going to explain this again. I'm looking for the foreign exchange difference. I explained the translation is occurring. This is what we want to do. What is the difference here? The difference between this and this. But don't forget the effect in interest. Interest is using the average in foreign exchange rate. All right, that's why I do the interest separately. So I use my balance to calculate the difference, which I think it's straightforward. You take the Egyptian pound value multiplied by the difference in the foreign exchange rate. We're doing the same with interest. However, with interest, we're using the average interest rate. That was the one that they had used initially. And then we're comparing it to the rate at the end of the year. Remember, we're doing this at the end of the year. So now we must also make sense of it. Ne? So what happened? Initially, we were going to pay higher. If we had to pay on the 1st of July, we were going to pay 58 cents per Egyptian pound. But now, because we did not pay it at the end of the year, it is now less. It is now 0.52 rand per Egyptian pounds. So we are paying less. Therefore, this is a gain for us because the value of our debenture has gone down. Okay, in comparison to the time it was on the 15th of July 2022. So it has gone down. It is a benefit for us. Therefore, this is a foreign exchange gain. Okay, so I'll come here. My debenture has gone down. So I'm going to debit my debenture with this value. And then I'm going to account for foreign exchange gain. This is as an income in my profit and loss. All right. The value has already been calculated as 322,343. 322,343. Okay. 243. 2. Right. So that's how it looks like. Any question? So if you look at it very well, we touched on everything that we need to touch on. Yeah, we touched on the foreign exchange. We touched on the interest that we meant to calculate. We touched on the payment on the coupon rate, the value in the beginning. We touched on the transaction cost. Yeah, so that is it, guys. That is it. This is all the journals that we can do here. Okay. Please, any questions before we move on?
Yeah, on the last part, is it a principle to always use initial balance? Because I got it wrong because I used balance of debentures as at 30th of June 2023 after the payment. So it means I didn't use 4,128,000. Instead, I used the balance after they made payment.
Okay, you should also get the same answer. You should get the answer correct even if you do that. I think the catch would be when you get to interest. Because on the balance, you'll be fine. The interest will be a cash for you now. Because what would happen at the interest, you need to remember that you must use this value that you calculated. Do not include them all together. Okay.
You know what I did? I did the amortization table using the Egyptian pounds. And then on the interest part, I took the interest exactly from the amortization table. And then I converted it to South African rands.
Which one? Which value did you use?
On my amortization table, the interest is 621,395
No,
Egyptian
I'm saying
pounds.
on the exchange rates. Which exchange rate did you use?
Okay, so that's where I even got it wrong because I didn't find the differences. I just used 0.64, and then the differences it only applied on 0.48, 0.58, and 0.52.
Okay, I think that's where the issue is. Just redo it again, but because that option should give you the answer as well. It should give you the answer. I think
Okay,
just
maybe I
redo it.
should
Yeah, just redo it.
I
Check
should
everything.
compare.
Make sure you put everything
I
in.
should, in this way, I should find the difference between 0.64 and 0.52,
Two.
not
Yes.
0.62 straight.
Yes.
Okay.
But yeah, but it depends. There's many ways to do this. Let me not confuse anybody. Just try that your method. It should give you the answer as well. That was it's one of the methods. It's one of the methods that should give you the answer.
Okay, thanks.
But I believe this one, the one I give you guys, this is the simplest, ne? So for people who don't like complications, just go for this. This is the simplest. But yeah, like that method that he's also working on is also one of the methods that you can get it right as well. And there's many other different ways to use it. The most important thing here is that you're finding the difference. That's the main core. So if I decide to use the initial balance or I use the balance at the end, whichever balance I'm using, I should be able to get the difference. It's the difference we are looking for in the exchange rate. Okay. All right. Any other questions? So that was A. That was A. I think we really took our time here, but I understand it's a financial instrument and people really likes to, make sure they understand the financial instrument. Also, it has foreign exchange as well, so it's really made sense for us to take so much time. Okay, right. So that's A. Yes.
Naomi, on the general entry, ne, can I account for the effects, ne, separately? Like
how separate?
Like I'll say on debenture, ne,
Mm.
I'll say debenture, ne, for initial balance, ne, and then put 247 680, ne, and then I'll come again and say debenture interest and put 74,563 on the debit side, and then on the credit side I'll put foreign exchange gain.
Okay.
Is it still fine?
The only problem is that account, does it exist, that one, debenture interest?
It does not exist.
Yeah. Yeah, that's the only problem. If it was an account that we usually use, then it would have been fine. There wouldn't have been a problem at all.
Okay.
Yeah.
Hi, Naomi.
Hello.
About the transaction cost again, because we deducted them from the debentures. Are they, what happens to them? Are we not going to recognize them?
It's more like capitalizing. When you capitalize, you no longer recognize it because it's part of the assets. Or in this case, it's part of the liability. It's the same thing. It's the same thing. Think of an asset when you buy PPE and you have initial direct costs that you would add to the assets. Now with a liability, you are minusing. It's just the same thing. So it becomes part of the value of that liability, just like the asset, it becomes part of that asset. You don't use it again. Okay.
Oh, okay, okay.
Yeah. Right. If there's no more question, let's go to the second one. Right. The next one is a 20-mark question. So that means we're expecting here to really work. All right. So B says, disclose the following notes in the annual financial statement of Masana Transport Limited for the year ended 30 June 2023. So here we are looking at notes, non-current assets, held for sale, and deferred tax. Now with deferred tax, really guys, especially in your level where you are right now, deferred tax will always be for a specific item. All right, unless really they want to sit on tax, which I don't think so at this level. Maybe in the test 1. Okay, maybe in test 1 they would have done that. With test where you are now, test 3. It will be difficult for them to test a lot of tax, ne? Because there's a lot of topics to test. So if they do bring in tax, usually it's deferred tax that they will ask you usually. It's rare that you get current tax and whatnot at this point. So it's usually going to be deferred tax. I'm not saying it's not going to come. I'm just saying it's rare. Deferred tax is the one where you should really expect. And if they do ask you deferred tax, you expect it to be specific on one thing. Okay? It's just be specific on one thing, not the whole question. All right. So here it's the non-current tax, non-current assets held for sale, and it is the deferred tax that we are asked to do. Right, so the name of the company is Masana Transport Limited. So I'm going to start here with my notes. So this is B. So the name of the company, Masana Transport Limited. I want to do notes for the year ended 30 June 2023. Right, then I'll begin to list my notes. Let me just do a line here so that it doesn't disturb us. And then I'll begin to list my notes. Note number 1, non-current assets held for sale. Okay, with this one, I need to know the story first because I start off by copying the story down there. So let's read through Trans Tech Division. Right, so it says, Masana has a separate division that specializes in fleet tracking technology, named the Trans Tech Division. During the 2023 financial year, a competitor entered the market and launched a fleet tracking solution that was more efficient and cost-effective than the tracking solutions offered by Masana. As a result, there was a significant decline in the demand for tracking solutions offered by Masana. Okay, guys, this happens a lot in business. So in business, if you are in business, expect these kind of things. Some people can throw you out of business. The very big example I could use is meter taxis and Uber. Taxifys, all of them. They just threw meter taxi out of business. Like, really. Although they still work, but yeah, their monies have really gone down because every reasonable person will prefer Uber to meter taxi. Okay, Uber is everywhere, it's convenient, comes and picks you everywhere. It's cheaper, it's cleaner, it's safer. Right, so any reasonable person will prefer to use Uber in comparison to meter taxi. So those are kind of those kind of situations. In business, it happens a lot. That is why you must always upgrade. You must always upgrade your business. Don't always stay with that thing. I don't understand our mothers, maybe because they don't know these things. I see our African moms that will sell Maguinia on the street for 10 years. And it will be the same thing. They will use the box, they will use charcoal, and the same thing. Never think of packaging, never think of, maybe making the place nicer, maybe use gas or something to be faster and make more, things like that. Well, but education actually helps also us with those kind of things. So business should be like that. Business should be upgraded. Otherwise, somebody will come with a better way of doing what you're doing and throw you out of business. Actually, I'm just raising this because you guys are accountant in the making. So I believe you should always, know these things as well. So like here, because somebody came with a better solution, it's now a decline on their side. They have less clients. Okay, so it's a problem for them. Right. So then let's continue. On the 31st May 2023, Masana's board of directors made a decision to sell. So they made a decision to sell the Trans-Tech division due to the declining competitive edge. So they did their calculation to say, okay, if we keep it versus if we sell it, which one is beneficial? Okay, cost-benefit analysis. So you have to always calculate that. Is it beneficial to keep or is it beneficial to sell? If we sell it, we may make more money, but if we keep it, we may just be losing and losing. So they decided to sell the Trans-Tech division due to the declining competitive edge. Consequently, Masana's directors decided to focus only on the transportation. So they decided to focus on the transportation and logistics in future. This could be because this section is doing well. Okay, and so is life, guys. So is life. Please focus on what you're good at. You will see there's more to life. When you push things you're not good at, you will just be frustrated because you feel like you can't do anything. Just a minute. I pressed the wrong button here. Okay, I'm back. Yeah, so like I was saying, even in life, guys, push what you're good at and you'll see that you can actually achieve a lot of things. if you keep being on an industry or somewhere that it's really not for you, you'll be frustrated and think less of yourself. You think you won't be able to achieve anything. So always know what's good for you. In business as well, such decisions are very important. The business must know what works for them, and then they need to keep pushing what is working for them so that they can continue to run their businesses in the future and do better, and improve and grow. Okay. So that's the decision they're making here. They decided, okay, we're only going to focus on transportation and logistics because that part is doing well. Right. So on the 31st May 2023, all the requirement, now check the dates, very important. The date the asset was going to be classified as held for sale is the 31st May 2023. The reason is because all the requirements to be classified as held for sale were met. Okay, because the requirements were met, that is the day we are going to use to classify our asset as held for sale. Right. So then continuing, and management expected the sale to be concluded in a single transaction, very important. For it to be held for sale, it must be concluded in a single transaction within a year. Within a year from this date. So this date is 31st May 2023. These assets must be sold just before 12 months from now. Okay. So not after 12 months. So if 12 months already lapses, let's say it's 31st May, right? So it should be sold on 31st May 2024. If it goes beyond that date, then it will not be held for sale. Okay. So those are the conditions. It must be a single transaction as well. All right. So this is a disposal group basically. Okay, in a single transaction by 31st December 2023 for cash, which is within 12 months. Right. On the 31st May 2023, the Transtech division had a fair value less cost to sale and value in use of this and that. Please take note, we use for where we are calculating non-current asset held for sale, we only use fair value less cost to sale. Any other impairment calculation, which is not non-current asset held for sale, you're going to use the higher of fair value and value in use. Okay, but when we are calculating the impairment under non-current asset held for sale, we use fair value less cost to sale only. That's the only one we compare to the carrying amounts. Please take note. You can go back to your notes, guys. We've done this before, but I'm just reminding you, please. Okay. Now let's continue. The carrying amount of the respective assets of the Transtech division on the 31st May 2023 were as follows. So we've got 3 assets here. The iTrack application, this we are told to go to note 1. Then we have inventory and we have trade and other receivables. Now, please take notes. When we are allocating impairment, I think I've said this before, I'm going to repeat it again. When we are allocating impairment, we allocate impairment only to non-current assets. That means PPE, intangible assets. Okay. Not we do not allocate to current assets. We do not allocate to current liability. We also do not allocate to financial instruments. Only tangible and intangible non-current assets. So in this situation, I've got 3 assets. I've got the iTrack application, the inventory, trade receivable. Inventory and trade receivable already are current assets, so we do not allocate impairments to them. So the only asset that looks like we can allocate impairments to is the iTrack application, which we still need to meet a little further. So I want to come back to my notes. How should my notes look like? I put my name there, note non-current asset held for sale. Then I will start here, guys. This story, you're going to copy the story. Okay. Focus. Okay. On 31st, Masana's board made a decision to sell. You see from there. You're going to start there up until here. Don't include where he's talking about fair value less cost to sell. So from here to here, you will copy that story word by word. If you want to summarize, you can summarize, but don't leave out important information. Okay, that's where you start. You can copy word by word. By word, what am I saying? On the 31st May 2023, Masana's board of directors made the decision to sell the tracks tech division due to the declining competitive edge. Consequently, Masana's directors decided to focus on, you can even leave that one out. We don't need that one. On the 31st May 2023, all the requirements to be classified as held for sale were met, and management expected the sale to be concluded in a single transaction on the 31st December for cash. Done. Okay. Then you come here, non-current assets held for sale includes, for sale includes, so you begin to list them now. So we have the iTrack, put a rand. We have the iTrack application. All right, I'm not going to put the values as yet. We have the inventory. Now, inventory, guys, we all know inventory is very easy. It's the lower of the carrying amount or the net realizable value. So if you compare the two, this is 250, this is 270. Definitely, the amount is going to be 250. And I'm not expecting, remember, inventory will not get allocated impairments, so I can use the value already straight. This is the shortcut to the exam, ne? Remember, in the test, you don't have time. Things like inventories, I can just put them there. I'm not going to allocate any impairments to it, and I know already that with inventory, it is the lower of the carrying amount or the net realizable value. Then receivables, trade receivables, it's also not allocated, and we use exactly the value that is given. It does not have a specific rule to say like inventory lower off or whatever. It doesn't have that. We use the whatever value that is being given to us. Same as trade and other payables. Okay, trade and other receivables. This is 850. Right, so the one missing is this one where we still have to calculate. And then, we, of course, we're going to get our total non-current assets. So now, in most cases, we're expecting an impairment. So you must also talk about impairment, okay? You also need to mention how an impairment, if there is an impairment, how much it is and where should it be allocated. Right, you can say something like this: an impairment. If there was a reversal, you also mention it's a reversal. Right. An impairment loss or reversal of so much. You put the value. That will be after you have done with the calculation. In this case, we have not done the calculation. Of so much was recognized. Now, if there's no impairment at the end of the day, you just come and stretch this out. Ne? This is just us saving time. Was recognized on initial classification of this division. What is this division called? Of Trans-Tech division. Trans-Tech division as held for sale. Division as held for sale. Full stop. Hey, where should these impairments go? Right, impairment, the impairment loss will be recognized. This or the impairment loss will be recognized as an expense in statement of profit or loss. Okay, then you're done. So that's how our notes should look like. I'm going to deal with the first note first. We'll deal with the deferred checks later. Let's just focus on one thing at a time. Right, so I'm going to do my calculation on the side. I'll do my calculation on the side. This was calculation 4. I'm going to call this calculation number 5. So to get there, we have to start first by calculating the carrying amount. So we need to know what is our carrying amount. I think I pressed another wrong button. Okay, but it's looking good so far. Okay, so I want to calculate my carrying amount of the group, my disposal group, or my cash generating unit. All right. So carrying amounts first of iTrack application. So this one, I'm expecting this to be an intangible asset. It's an application. Then my inventory. Then my receivables. I'm just going to write receivables because of time. Right. Inventory and receivable. I already got my figure. Inventory lower of net realizable value or carrying amount, and the lowest was 250. The receivable was given. The balance is given to us. We use the balance as is. So our problem here is this one. I'm going to call this calculation number 6. So we're going to go to number 6 and then understand the our calculation of iTrack. Is that a question? Is that a question, guys? Okay, so then let's go understand what is in the iTrack, whatnot. Right. Let's finish this. We're busy. We're still reading here. Okay, so it says iTrack, refer to note 1. And then it says on year end, 30 June 2023, the carrying amount of the Trans-Tech division equaled the fair value. So here we don't have to worry anymore at the end of the year because they equal the fair value. It was just the same. Okay. Then let's go on the next page. Masana accounts for intangible assets in accordance with the cost model. So all the intangible assets, they use cost model, and amortization is provided on for straight line method over the estimated useful life of the asset. Masana carries its inventory at the lower, here it is, lower of carrying amount and net realizable value. Masana accounts for changes in accounting estimate in accordance with the reallocation method. Then note 1. Right. This is the note we're looking for. So let me use different colors so that we pay attention to this. During 2021 financial year, Masana commenced with a research and development project. Okay. So even with our intangible assets, they are looking at the research and development section, right? Which is another calculation. So we are just going deeper, guys. I'm sure you are picking how they bring topics together into one. They're just fusing them all into one. Okay, so it says Masana commenced with a research and development project to develop a new tracking application called the iTrack. The application will provide real tracking data such as global positioning system, GPS, location, and full trip history on any vehicle with an installed division. The application uses radio frequency and GPS tracking technologies to detect and counteract signal jamming. The research of the iTrack application commenced, so the research commenced on 1 October, very important, 2020, sorry, October 2020. And on 1 March 2021, the board of directors determined that the iTrack application satisfied all criteria for an intangible asset recognition and approved the development of the application. So development commenced on 1 March 2021. The development of the application was concluded on 30 April 2021. 30 April 2021, development was concluded. Now, before I move on to read the expenses, let me first put this in a timeline. Without a timeline, I won't be able to get this. Okay, so let's do this. I need a clean place for my timeline. Let me see. Maybe I should bring this down a bit. Let me just bring this down, put my timeline first. All right, so something like this. Right, on 1 October 2020. Okay, this is when research commenced. Research commenced. Then on October, and then on 1 March 1 March 21. This is when development commenced. Okay, and then my development, if I just go back. So we spoke about October, March. Then my development concluded on 30 April 2021. April 21, March, April. 30 April 21, development concluded or ceased or whatever the case is. Okay, so I need to be able to get my periods. So research up from that up until this date. So that means October, November, December, January, February, 5 months. So research took 5 months. Right, then as for my development, so it's March, April. It took 2 months. Now, in total, the both research and development in total took 7 months. Now, once you have this in front of you, you are sorted. Okay. Once you have your timeline looking this clean, then you're good to go. So I'm dealing with research and development. The cost of my software, is the software, whatever application. Okay, the cost of this application, intangible assets, will fall between the development period. The research period is expensed. The development period is capitalized. So I'm interested in the development period, following each and every expense that we incurred. So I'm now going to look through the expenses. Okay, so let's go through. Let's read through now. Now that we know our periods, we can continue now from here. Let me use blue. Let me go back to blue. It says Masana employed a software developer to work on the application during both research and development phase of the application. The software developer earns a monthly salary of 300,000. During April 2021, Masana consulted with Professor Webb. So that's the first thing first. We have a software developer that earns 300,000 per month. Wow, how I wish this was my salary. Anyways, this will solve all my problems, yo. Okay, let me continue. During April 2021, Masana consulted with Professor Webb, an expert in application testing, and paid her a once-off consultation fee of $750 on 30 April 2021. Right, that is expense. So we need to be putting numbers to our expense, right? Expense number 1 is this one. Expense number 2 is this one. Then we continue. Then Masana used an integrated development environment software. So they use another intangible asset, IDE software. It's another intangible asset which was used into our programming, our program of what we are making. So when that means the amortization, they must be part of the cost, just like we would do with a PPE. Usually they'll use another PPE or a computer or whatever into their research and development, and then the depreciation on that PPE must then become part of the cost. It must be capitalized to the cost. This time around, they use another software. So they use an intangible asset inside an intangible asset. Okay. Right. The development and the coding of the iTrack application. The IDE was acquired, very important. So the IDE was acquired on 1 July 2019 for an amount of 4.5 million. The IDE was available for use as intended by management on acquisition date, and on this date, the IDE had an estimated useful life of 6 years and an insignificant residual value. Then on 1 July 2020, so that is basically a year after, management estimated that the IDE had a remaining useful life of 4 years. So they changed the useful life just a year after. All right. Let me just write this already in case you guys did not pick it. So there was a change in estimates. Okay, there was a change in estimates. All right, so you can see, guys, they are still trying to squash things into this one question. We are just squashing. We are busy with non-current asset held for sale, and then we even forget about it now because we are busy with intangible asset. And inside intangible asset, they're just squashing more things inside. You see, so they just decided to squash for us, changing estimate as well. So that's how it is, guys. That's accounting. That's what I'm saying, guys. Only if you do question, that's when you're gonna pass. If you don't practice, there's no way, because you wouldn't know. It would be like speaking Chinese. It's like a strange language. You have not had time to do it. To pass accounting, one must do many questions with understanding. Then that's it. If you are not doing that, I don't know. Okay, let's continue. So it says the residual value of the iTrip application remained unchanged throughout the period. Right. So that was the IDE. So this one would be expense number 3. Here we deal with depreciation, but you must remember changing estimate. Amortization, but you must remember changing estimates. Okay. Then total electricity cost directly attributable to both research and development of iTrack application amounted to 288,000 and was incurred evenly during the period of research and development. Please remember. So that will be my expense number 4. And then we go on. On 1 May 2021, the iTrack application was available for use as intended by management. So it was available for use. And on this date, an estimated useful life of 10 years and a residual value of that 325,000 was allocated to the iTrack application. So that means all the expenses are done. Now we are able to now account for our intangible assets. Okay. Then they go on to say, let me change the color again. They go on to say on the 31st May, this was when it was now held for sale. We went back again, 31st May, held for sale. The recoverable amount of the iTrack application was correctly determined to be 1,360,000. Right, with all our fusing and forcing things in, we now come back. Now we can answer our question properly. So let's start. So I'm gonna start with my first expense. So my first expense, which we put in our numbers there, the first expense was they employed a software developer. All right, and the software developer was paid a monthly salary of 300,000. So that would be my first expense. Salary, software developer. All right, so this software developer guy gets 300,000 per month, and my development period only took 2 months. So I'm going to multiply this by 2 months. Okay, I think this one is straightforward. That will be 600,000. Right, so that was my expense number 1. Expense number 2, this is where number 2, yes, there we go. Number 2 says during April 2021, Masana consulted with a professional web and expert in application testing and paid her a once-off consultation fee of 750. So we have consultation fee. It was a once-off. It was paid when? Guys, you have to now ask the question, when was this paid? Because remember, we still have the timeline to deal with. Is it during research or is it during development? So if you see here, this happened in April, and April is falling within the development period. So this is going under the development. It's going under development. So we have consultation fee. This was once off, so it was 750. We check it as is, once off. Okay, so we're done with 1, we're done with 2. We go to 3. 3 is where they use the IDE. Now, here we have to be quite careful. We have to put our dates and everything in place. What we need here is the amortization. Okay, and we need the amortization within this period, the period in which we are busy with, not just any amortization, the amortization for development period for only 2 months falling in that period. So IDE, amortization on IDE. Okay, I'm just going to do it separately and bring it here. So what happened here is that, let me get the date right. So what happened here is that this was purchased on 1 July 2019 for 4.5 million. It does not have a residual value. And the useful life was 6 years, okay? And then the next year, same July 2020, they now changed the remaining useful life. Remember, it was supposed to have been 5, but now it's 4. So there was a change in estimate. Now, what we say about change in estimate is that, where am I? Where did I want to do this? Okay, on the side. So what we said about change in estimates is that, number 1, change in estimate. Apply change in the beginning of the year. Beginning of the year. Okay, use carrying amount to calculate further, in this case, amortization. And you should use remaining useful life. Useful life. Right, so in this situation, what happened is on 1 July 2019. So they purchased this for 4.5 million and the useful life was 6 years. Okay, that was fine. We were good with that. And then on 1 July 2020, this was remeasured. Remeasured, useful life is now 4 years, but in a space of 1 year. So this proved that there was change in estimates. Okay, so that's the story. That's what happened. So I want the carrying amount here. I want to calculate my carrying amount that was here, which I will then use to continue calculating. Just so we apply change in the beginning of the year, which is here. Now use carrying amount. So I need this carrying amount, which I will use to calculate further depreciation using the remaining useful life. Okay, so it's only 1 year that passed. All right, so to get this carrying amount here, I simply need to take my cost, 4.5 million, minus the amortization for 1 year, 4.5 over 6. So this is my amortization for 1 year, minus this, I'll get the carrying amount. Right, please help me with the calculation. Okay. Confirm the amounts, 3,750,000. Please confirm if you're getting the same.
Yes.
Right.
Yes, it's correct.
Okay, so this is the carrying amount I was looking for. That's the one I will use now. In 20, what is it called? 2020. Now, when I come back here, that will be July 2020. So this is it's falling within here. It's actually falling in this. It's falling in the current year, né? Because the year begins in July 2020. According to this year, not the year I'm dealing with now. I'm talking about the development period. It falls within the development period. But I'm focusing on the development only, which is 2 months. So now I can calculate my amortization as follows. Use the carrying amount, which is 3,750,000. Okay, that's my carrying amount. Use the remaining useful life, which is 4 years. So I'm going to use 4 years, but only for the period pertaining to development, which is my 2 months. Right. So 3,750,000 divided by 4 years, multiply by 2, divide by 12, And this is going to give me, my amortization will be, please confirm, 156,250. Please confirm if you're getting the same. Guys, let's be fast. Let's be fast. Let's be fast.
It's correct.
Thank you. All right, so that was one of my expenses. Let's go back to our list again. That was expense number 3. So I'll come to my number 3 and tick it. Then we are looking at expense number 4, which is the electricity that are directly attributable. If this was a fixed cost, you will ignore it, okay? If this one was a fixed cost, you just ignore. But they said the electricity is directly attributable, so it have to be capitalized. Right, so the electricity, it's 288,000 for the period of both research and development, and then research and development period took in total 7 months. Okay, so I'm gonna take my 288,000, apportion it. So here, electricity. Right, so I'll take 288,000 multiplied by 2, which is for the development period, over the total research and development, which is 7 months. So 2 over 7. So 288,000 multiplied by 2 divided by 7. All right, and I'm getting 82, 286. Okay, please confirm. Right, let me go
It's
down my
correct.
list. Okay, so this is the one I did. This was the last expense, right? This was my last expense. So these are everything that will make up the cost of these intangible assets. So at this point in time now, I can calculate my total cost of the intangible assets. Please let's add. Right, so I'm getting 1,588,536. Please confirm.
It's correct.
Right. So the reason why we are calculating this is because where was our calculation first? Yes, Clive? Yes. We want to know what is our carrying amount, right? But so far, I was able to calculate my cost. So I still need to calculate my carrying amount. Yes, Clive?
Hi, Naomi.
Hello.
Why are we avoiding the to disclose the research cost?
Okay, it's not necessary. It's not required. If you decide to show it, it's not going to be marked. It's just going to be ignored. It will just be.
Oh, there are no marks for it.
There's no marks for it. They don't want it. Remember, they only want the carrying amount of this. So research cost doesn't come in there.
Okay, thank you so much.
You're welcome. Right, so we continue from there. Now that I have my total cost, I now need to calculate my carrying amount. And the carrying amount I want is the carrying amount at, so I need to put my date. I need my carrying amount at 31st. Oh, guys, sorry. I think my sinus is reacting now. Okay, 31st May 2023. So that's the carrying amount I'm looking for on that date. Okay, so in between, I want to calculate amortization. All right, please, you always need to know your dates very well. We need to know our dates very well. Okay, let's go and read further. So on 1 May, okay, so May, that's when it was available for use. So my depreciation begins in May. All right. It was available for use as intended by management on this date, and then an estimated useful life of 10 years and a residual value of 325 was allocated to it. Okay, the most important thing is get the date right. Get the date right, then you are sorted. So what are they saying? The asset was available for use on 1 May 2021, if I'm not mistaken. Let me just double check the year. 21. Yes, 21. Okay. On 1 May 2021, our year ends in June. So 30 June 21, that will be my first year. All right, so this will take, so it will be May, June, 2 months. Then the next year is 30 June 22, that's a full year. That will be 12. Then we are here now. We want to get to 31 May 2021. This one will be 31 May 23. On this one, it's not a full year. It's 11 months. May, June, 11 months. So all the years that the asset has actually moved to, we can now calculate. So 2 plus 12 plus 11, in total 25 months. Sorry, yes, months, 25 months. Right, so it took 25 months since 1 May 2021 up until 31st May 2023. It took 25 months. All right, so now I can calculate my amortization to say my cost, which is what we're seeing there. My cost 1,588,536 minus, it has a residual value. My residual value is 325,000. My residual value 325,000. Right? Then the useful life is 10 years. My useful life is 10 years, so I'm going to divide this by 10, or I can change everything to become months. I can change everything to months. 10 years multiplied by 12. This is going to give me 120 months. Right, so I can divide. I'm going to divide by 120, and I'm going to multiply by 25 months. Okay, please let's calculate. Let's calculate my accumulate. Actually, this is accumulated because this is everything you've done so far. Accumulated amortization. Right, so 1,588,536 minus 325,000, right? Divide by 120, multiply by 25. Okay, I'm getting here 263,237. Please confirm. Guys, we have to be fast. And where are you guys? Are you tired already?
Yes, it's correct.
Yes,
I want to take you back to change in useful life. Okay, the change in useful life was estimated on the 1st of July 2020, right? So, and then
sorry, I was just
that's
writing
where
this. Wait, let me go back to the where you're talking about that. So it's here, né? Okay.
yeah.
Yes.
So I want to understand if the change in estimated useful life was made on the 30th of June 2020, how are we going to calculate our carrying amount?
Okay, good question. All right. Remember, the change must be done in the beginning of the year, irrespective of the when it was done. Okay, so if it was done at the end of the year, we will apply it at the beginning of the year. All right. So the only difference is we would have added a year. Okay, that's the only difference. So I was going to apply this if it was on 30 June, and they said the remaining useful life is 4 years. All right. So I would go back to July the 1st, but now it will be 5 years because I am, remember, I'm counting even that one that I've added back. I'm counting the year I'm adding back. So it's going to be 5 years now instead of using 4 years.
Okay. So
Yeah.
so if the change is made on the 30th of June 2020,
Mm.
and then it means we are required to calculate the carrying amount
Mm.
on the year end.
No, you must always go back to the beginning.
You must always go back to the beginning.
Always. That's the principle. Remember, I even put the rules. Always apply the change at the beginning of the year, even if they gave it to me at the end of the year. I must apply it at the beginning of the year. That is why I'm saying add 1 year back.
Okay.
Go back, yes. Always.
I get it.
Okay. Perfect.
Okay, so Naomi, the adding of the 1 year is because of we have to go back.
Yes, exactly. That's exactly the principle. It's because we have to go back.
All right, thank you.
Okay, so where I am now, I think we've done quite a calculation. But this one, guys, I think it's straightforward because we've done a lot of this kind of calculations before, ne? I think we've done a lot of these kind of calculations, so it shouldn't really be a stress on you guys. So we got the carrying amount. However, there is a problem. There is a problem. They mention here, let me go back. They mention here, sorry, let me just, yeah, here, I put them in yellow. They mention here that on the 31st of May, which is the date the asset was linked for sale, right? They said this iTrack application had a recoverable amount of 1,360,000. So it has a recoverable amount, individual recoverable amount. So we can calculate individual impairment. All right. So its recoverable amount, let me use a different color. Its recoverable amount amounted to 1,360,000. Okay, so in other words, I can get an individual impairment, but check this out. This is my recoverable amount. This is my carrying amount. If you check the values, the carrying amount is actually less. So there's no impairment. I don't know if you are picking it up. The carrying amount is 1,325,000, while the recoverable amount is 1,360,000. Okay, so it's not an impairment. And there was no previous impairment which we can reverse. Reversal of impairment only happens if there was a previous impairment. If there was no previous impairment, we do not reverse anything. And in this case, there is no impairment. So I take my cost, my carrying amount as is. I hope you guys are seeing what I want you to see. Any question here? Let me even put an NB. Any question here, guys? Remember, we did a question like this, if I remember, in the previous revision, where we said you have to, if you have a group like a cash generating unit or a disposal group, and the individual asset has an impairment, you always calculate the impairment of the individual assets first before the group, right? We did a question like that. So now here, there was a possibility to calculate it. However, the recoverable amount was actually more than the carrying amount. So there was no impairment, even though they were given the recoverable amount. Okay, because it was not less, it was more. And there was no previous impairment, so there was no reversal either. Okay. Do we all understand what I've just explained?
Yes, yes. Otherwise, if there was an impairment, there would have been an indication that on this day there was a decrease in what, and then they also indicated that due to high economic what we recovered, then that's where you would have reversed this amount, the one
Yes.
that we are currently on.
Yes. Yes. Perfect. Yes. That's how it's done.
Okay.
Okay. So the reason why I always stretch our mind is because they can bring that in the test. Okay. So that's why I'm stretching our mind, the possibilities. Although it didn't affect us now, it does not mean it's not going to affect us the next time. So it's always good to stretch our mind when we have situations. All right. So now that I have my carrying amount, I can continue with my question. So my carrying amount, 1,325,299. I come here now. I've calculated. Let me use it a different color. 1,325, 299. Oh, sorry, Sam. Don't worry, we are recording everything. Although because the class is too long, the recording may take longer to process, but it's still good. I'm gonna send as soon as I get it. Okay. Let's continue. So now that I have my what is it called? My iTrack application carrying amount, which I sorry guys, which I use calculation number 6. I already put it here to get it. Okay, so I have my all the assets put together. I can calculate the total carrying amount. Right. So I take the 1,325,299 plus 250,000. Yeah. Plus 250,000 plus 850,000. Right, this gives me 2,425,299. Please confirm if you're getting this. 1 minute, guys.
Correct, it's correct.
Guys, am I the only one who can't hear anything?
No, she has muted us, but she's coming back.
She said 1 minute.
Oh, okay, thank you. You.
Jeanette, rato panic.
Gape ke tshwere ke stress ra o wa gane network ya ka e dira jwang.
Last year, we got over 20, so over 20% got this exam. Wow.
Marakete. And sha mo bona no o lebeletse re e monate jwang.
Ah, ke tonya gore stressa fela bona.
Good. No. Last year.
No, wa tseba nako nngwe wa faila and then o repeat o be o iputisha gore mara ke feitse eng gona mo because this thing I understand. No tlhoka fela motho o tshwana le Naomi so.
Last year ne re gatile man.
Yeah, le neng hatile.
Mara ke a understand hape FAC it's a lot, guys. FAC ke ntši. Awa.
Check a note 1. Note 1, you're almost essaying unnecessarily.
Bathong. And then ba fetša ba timana ka di-marks.
Yo.
Sorry guys, I'm back. Okay, I think we stopped here about the carrying amounts, ne? So yes, so once we have calculated our carrying amounts, and then we are now going towards the impairment, all right? So with non-current asset held for sale, we only look at the fair value less cost to sale. So we only compare carrying amounts to fair value less cost to sale. We don't use the value in use here. All right, we use only fair value less cost to sale. So I'm gonna call this calculation 7. Oh, space. Let me do calculation 7 underneath here. I'm gonna call this calculation 7. So calculation 7, I want to calculate my impairment. Right, so I need my carrying amount minus fair value less cost to sale. So my carrying amount, it's the total group to carrying amount, right? So 2,425,299 minus fair value less cost to sale. This was given. If we go back to the question in the beginning, it was given. Guys, I have so many medicines in the house, I don't know. I think my sinus is just too high. Maybe I need to get it operated or something. Yeah. I think it needs to be operated, or maybe something is just not right in the room where I am. Maybe there's no much air coming in or something, so it's just reacting. I'm sure it's reacting to something which I have not picked up yet. Sam. Hey guys, you are writing. Hey, let's get this done. Let's get this done. We want you guys to pass. Okay, so where was I? Fair value, less cost to sale. This is given in the question. So we go back. I think it was given in the beginning somewhere. So I'm just going to go back to the beginning. Yeah, it was given here. It was given here. It says the trunks division had a fair value less cost to sale of 2,350,000. 2,350,000. So we're going to use that to calculate. I'm sure you guys can all see it, ne? Fair value less cost to sale, 2,350,000. So we come here, 2,350,000. And from there we can get our impairment. Two 2,999 minus 2,350. Please confirm the value. I'm getting 75,299.
It's correct.
Thank you. Right, so that's my impairment. I think we've come to the end of our calculation. We have our carrying amount, we have our fair value less cost to sale, we have our impairment, so we can complete the notes now and do the allocation accordingly. All right, so here, this is the amount we just calculated. I can just come here and put the impairment loss of 75,299. Then my total must equal to my fair value less cost to sale. That should be my total here. So that will be 2,350,000. Then the difference would actually, I can now calculate it either this way or this way. So here, what I want, I'm going to put the whole allocation to the iTrack application. The whole amount is being allocated to the iTrack application. So let me go back to the carrying amount. Let me go back to the carrying amount. So it's 1,325,299 right? And I'm allocating the full amount here, the full 775,299. I'm going to explain again. The reason why we are allocating the full impairment loss here is because all the other assets do not qualify. We only need non-current assets, except, of course, financial instruments. Inventory is a current asset, trade and other receivable is a current asset, so it does not qualify for the allocation of impairments, okay? So I can either get this from here or I can get it from here. I can just take this total minus to get there, or I can get it from here. Whichever way, the answer should be the same. So I'm getting here, it's 1,250,000. Right, please confirm the figure.
It's correct.
All right. I don't know if it's just me or what, but this seems a little bit easy, although it was a lot. What do you guys think? And then the silence in the house. Then the house is silent. No, I don't know, but part B seemed, I don't know, I felt like they could have done better. Not, should I use the word better? Maybe I'm using the wrong word. But I feel like they could do more. You know, other questions, they would usually try to complicate something. I felt like there was no complication apart from them trying to fuse a lot. They just fused a lot of things together with no complication. What do you guys think?
Naomi,
Yes.
can we please go back to the impairment calculation?
Okay. Clive, yes, you can ask your question. Oh, were you still asking? There's the impairment calculation. Do you want something there?
How did we get the 2/3?
It's given in the question. It's the fair value less cost to sell. It's in the beginning. You have to go back to where transwater division started. Here.
Oh, I used the wrong amount. Sorry, thank you.
All right. All right. Yes, Clive, I think you wanted to ask.
No, I was lost on the calculation of impairment. I thought maybe the impairment was related only to the iTrack application, but now yeah, I see that it's related to the whole group.
Yeah, the whole group. Yes, that's correct.
Yeah, no, you are right, because when you look at this one, especially on impairment, there was no those limitations
Yes.
that you must apply.
Exactly. A lot of things was not here. A lot of things. If you check the question we did, there was this question we did. I think that was the most difficult question. I think it was also a previous test or something. I think it was a test last year test or something like that, where we did there was reversal,
I
and we
think
had
it's
to
assessment
allocate, and then we had limitations. I don't know if you remember. It was the previous
Yes.
revision we did. That was a
It-
difficult question.
It's assessment 6.
Assessment 6, yes. That one
Yes,
was
there
a
was,
difficult question. That was difficult because there
and
was
there
too
was
much. Too much for
there
one
was
test.
it was discussion question where you are required to calculate, to allocate the impairment on CGU and
Yes,
also
yes,
allocate the reversal.
yes, yes. That was too much for students. Seriously. Yeah, especially in that time of the test. No. I felt
It was very
that one,
unfair.
that was more like an exam question, not a test question. I think they were
It
just
was
too hard.
unfair.
They were just too hard on you guys. That is why when they came to this one, they went down. They slowed down. No, this was a serious slowdown. But just that if you are not practicing, you still find Sam. Sam, if you're not practicing, it's not going to be easy. You have to even know what we are talking about. Did you even do that question, Sam? That question we are talking about. You see, if you haven't done it, you are at a disadvantage, you see. The problem with accounting is not just that it's difficult. It's the time you're spending with it. If really you are spending a lot of time in accounting, you won't, of course, it's not going to be easy like that. I don't want us to use the word easy with accounting. It's not easy because it's not like in the, they just throw it to you. You have to, of course, apply your knowledge. You have to apply your analytical skills. You have to apply your think out of the box. You really, all of those things are in. But if you know your principles and you're practicing, it becomes easier to do. But if you're not practicing, then everything is going to be difficult. Everything we're going to talk will be difficult. Okay. And the problem is the amount of work is a lot. They will keep bringing in more topics and bringing in while you are still slowing down. So this is not a module that you leave behind. You don't leave it behind. You move along even faster than it. So if you leave it behind, they will keep bombarding you with more topics and expecting you to know whatever that has passed. And life is continuing. Tests are coming. More topics are coming. So we're just going to learn. Then it just becomes a lot. So you have to be strategic. The strategy is, it's a good thing that you guys are already attending class. This is the first strategy. Attend class. Very good. So attend class, we summarize things, we make it easier. And then, of course, if you have time, also you can also just read through everything else. If you have time, then you have the summary from the class. Then you are doing questions. You are sorted. You are sorted. If you can do questions and you are stuck, you ask somebody. There's a tutor that can support you, help you there and there when you're stuck. Then you are sorted. There's no way you are failing, guys. So here I'm telling you guys, failing here, it's a decision. It's a decision of deciding not to sacrifice. If you are going to sacrifice your time and sit and do questions and ask questions, and guys, your group is not busy. It's not busy, guys. It shouldn't be like that. Your group is not busy. I'm not seeing people asking questions in the group. I'm not seeing people answering questions. Or another way of learning, guys, another strategy which worked for me, I'm talking personally, what worked for me is that I used to be in groups where people were active. So they would always ask questions. I always wanted to be the one that answers questions. So when I see a question that I don't know, I go back to the study guide and I learn it. I research until I get it because I want to answer it. Do we understand? So it was a challenge for me that they were throwing. People thought I was helping them, but actually they were helping me. So once I answer something, I cannot get it. I cannot forget it again. What I answer, I cannot forget. Because I did a lot of thought processing to give you the answer. Okay, so let's be busy. Let's be doing questions. Let's be sending questions on the group and let's be answering amongst ourselves. And we'll see that's another strategy that helps you pass. So failing FAC, guys, is a decision of not sacrificing. It is difficult. I agree with you. I'm not saying it's easy. I repeat, it's not easy, but needs sacrifice. To pass it, one must do a lot of sacrifice. Spend a lot of time with it, do a lot of questions, discuss with others, be in active groups, things like that. Sleep less, things, just that. Then you will definitely pass, okay? Right, so at least this gave us a little bit of a break so we can move on to the next question. But do we have questions before we move on? Questions? Right, so the main question was B, which we just did. That was the main one for today. That was the main question. And like I said, it was not so much complicated in comparison to assessment 6. So let us go to C. Right, so C says, critically discuss. So we are back to the discussion question. And I said, when they use the word critically means it has to be lengthy, it has to be in detail, okay? It says critically discuss whether the correction of error note. Yes, Lebo.
Naomi, you didn't do the deferred text, or we can do it on our
Oh
own.
yeah, I didn't do deferred text. Sorry, I actually forgot about it. I forgot about it. Yes. So deferred text must relate to the contract with Zamalek Co. Limited. Okay. Let's do that first. Zamalek Co. We only want deferred text relating to Zamalek, and it's only this information. Right. So let's do that. Thank you so much for that. I actually forgot about it. Okay. So on 1 January 2023, which is during the year, Masana signed a contract with Zamalek to transport 10,000 tons of coal from Pete Relief to Richards Bay Port Terminal during the second quarter. This is second quarter of the calendar year at 320 per ton. The terms of the contract further stipulate that Masana would give so it's the part of the contract stipulate that Masana would give Zamalek 20% discount for any future coal transportation services done during the third quarter. So we're busy with the second quarter, and they're talking about the discount, which only comes in the third quarter of the calendar year. Right. Then the contract between Masana and Zamalek is a valid contract in terms of IFRS 15. So here now we are talking about revenue. I think on our list of, I think we're doing list of topics, né? So we ended up with 8 topics. This is the 9th topic now. Here it's revenue. And you can see they even listed there to say IFRS 15. Guys, please do support my YouTube channel, guys. Please do. I have this topic on my YouTube. IFRS 15, I think it's really done in details. Go and check it out, guys. And don't just watch, just subscribe. And don't watch it as a picture, what gallery. Go into the YouTube channel, okay? Watch it from YouTube, please. And subscribe, and please share with your other groups. I'm sure you guys are in other financial accounting groups with you. You know more students that I do. Ne? Please do share these things. It could be helping somebody maybe who cannot afford to pay for a tutor, or somebody who cannot afford, is on their own, nobody to help them. Please do share these links on those other groups, okay? Please. Although I've done mainly Microsoft Excel, and I was really focusing on that side more, but I'm also doing the accounting videos. Like now I've just posted the income taxes. I'm gonna do leases as well later. So please do share them on every group that you are in, eh? Please do. People really need these things, and a lot of people cannot afford classes and all those things. Please do share. And yourselves, please do subscribe. Please help a sister out. Please do subscribe. Thank you. You're now marketing, guys. Let's continue. Okay. So where was I now? Yeah. So we're busy with IFRS 15 revenue. So it says the transport of 10,000 tons coals, where was I? The transport of the 10,000 tons coal as agreed upon within the signed contract was completed by 30 June 2023. So basically performance obligation was satisfied. This is where we say performance obligation was satisfied. Okay, on 30 June 2023, which is our year end. Then we continue. Masana intends to offer 5% discount to all its customers during the third quarter of the calendar year as part of the marketing strategy. In terms of the contract, Zamalek cannot use the 5% discount in addition to the contractually stipulated 20% discount offer. So on 1 January 2023, Masana estimated, so there is an estimate, I can use this. Remember, an estimate now I can create a provision. So I can work with this figure now because there's an estimate, okay? So it says, on 1 January 2023, Masana estimated that Zamalek will require transportation services of 15,000 tons of coal at a price of 395 rand per ton during the third quarter, this third quarter we're talking about, of the calendar year. In addition, Masana estimated that there is a 90% likelihood that Zamalek will use the discount offered in the signed contract. All right, and that's it. So here, what we have here is revenue transaction. All right, so let's just make sense of this revenue transaction. You, Sam, the way you write, Sam, guys, Sam, the more you're writing to me on the chat, I have to stop the class and read.
Naomi, I wrote that like ages ago. It was not now. Sorry.
Oh, okay, no problem. Okay, where was I? Oh, I think I was explaining revenue. Okay, so with revenue, basically, we have to look for those transactions that actually happened, right? Just because we signed a contract does not mean there's revenue. So we have to check, did the performance obligation, was it satisfied? In other words, did the control pass from us to the customer? So if you check here, the contract, there was a contract between Masana and Zamalek. So Masana is the one providing the service, is transporting 10,000 tons of coal. All right. So they are providing the service, and the service is provided at 320 rand per the ton, and that's 10,000 tons. So we have to multiply by 320 to get the value. That's my transaction price. But now there's an option for discount. Okay, so according to the contract, we can give them a discount, but not now, only on the third quarter. Right now, the what should you call these contracts? The contract we're busy with now is for second quarter. However, if they continue to buy from us in the third quarter, we are intending to give them a 20% discount. Okay, so that's the story. And then they went further to say that we, from the way things are looking, there is an estimate that is made that this company, actually Zamalek, will actually purchase 15,000 tons of coal in the third quarter. So that third quarter that we're saying, if they do purchase, we're going to give them 20%. We have an estimate to prove that there's a high chance that these people will actually buy from us. We even have a figure. We even have a figure of 15,000 tons, and the price as well per the ton. But the estimate is that 90% of these, there's a 90% chance that they will actually use the discount. Okay, so the discount was initially 20%, and then we mentioned that everybody else we expected to give them a 5% discount, and we cannot add more on top of that. Okay, so in other words, if 20% is what we are giving you guys, and we can't add on top of the 20%, and everybody else is getting 5%, so we can then base this contract by removing the 5. The 5 is everybody gonna get 5 anyways. So meaning from the 20, if we remove 5, which is given to everybody, what is special about this discount is that it's going to be 15%. Now, why am I touching on discounts? Why am I touching on discount? Any other time that the company decides to give back anything to the public, even the coupon, you know what Clicks, and I think every store does it, right? When you purchase, there's those cards we use. We buy and then we use the cards. Like Clicks. I know my husband uses it a lot, because we have babies. We have, our children here, that so we use Clicks a lot to buy things like Pampers, to buy their clothes, their food, and whatnot. So my husband uses the Clicks card a lot, and you always get points, and the points will become so much whenever we go to buy. We use those points. It always helps us. Even in a situation like that, where the company is giving back in terms of points and whatnot, it's also considered a performance obligation. Okay. So in case you come across something like that, that is also considered a performance obligation. Just like this discount, it's the same thing. The discount we're giving, when you use the points, when you get points from those cards, it's also just more like a discount, because it's like the business is now giving back to the customer. Do you see? It's also referred to as a performance obligation, which must also be satisfied. All right. So in this case, we have the actual sale, which is the 10,000 tons. Then we have this estimate that we are creating, that we are going to give this person 20% discount. Of course, we're removing the 5 because we're going to do the 5 as a marketing to everybody else. Right. So it's a 15% discount that we are offering to give to this client. But now it is not yet satisfied. It's only going to be satisfied on the third quarter. Because it's going to be satisfied on the third quarter, we have to account for this as a contract liability. So what is not yet satisfied is accounted for as a contract liability until when it is satisfied, then we reverse the contract liability to revenue. Okay, so what is happening here? So we're doing, we have to do deferred tax, but I'm just going to do the calculation so we get to the deferred tax. I don't see a lot of asset and liability. The only asset I see here is the contract liability, which has to do with this discount story, this discount story that we are talking about. I don't see a lot of things, so I'm not expecting my deferred tax calculation to be long because revenue is an income, it's not an asset, it's not a liability. In my deferred tax, I want to see liability and assets. Okay, so what's happening here is something like this. So we're gonna do that table. Right, so here I'm gonna have my transaction price, and then allocation percentage. Use red for this. Allocation percentage. Guys, this is just one way of doing things. You don't have to do it in the table, né? But besides, it's a class, so I have to make sure it's clear. So I have my transaction price, I have my allocation percentage, I need my individual price, standalone selling price. Standalone selling price, and I need my performance obligation. So the moment I have more than one performance obligation, when I have more than one performance obligation, it's always advised to do it this way. But it doesn't have to be the table form. Just make sure you understand the calculation. Okay, so I have the transportation cost of the 10,000 tons. So I'll come here. This is the main revenue. Transportation of tons or tons of coals or whatever that is. Right, and then I have this discount voucher or incentive, either discount voucher or discount incentive. Okay, it also becomes part of the performance obligation. Please take note, like I said, I gave you an example of what I think is practical. We use this at ShopRite, Checkers. Checkers also has that card where they give you points. The more you buy, the more points you get. And then you also get discounts because you are part of their members or whatever. You get, when they're selling lower prices, you get discount. Those are also treated as performance obligation. Okay, right. So we're going to have a calculation like this. Sometimes it's going to be easy to calculate this because it won't come in terms of discount. Maybe it will come like a warranty where they would have given you a price or something. Then you'll do this as well. So let's start with the initial one. So they said the price is 320 for 10,000 tons. So that is my package price. 320 for 10,000 pounds. 10,000 tons, sorry. Tons multiplied by 320. So this is actually 3,200,000. This, in this case, for the transportation cost, it is standalone selling price, but it is also the package price because all the customer is paying is 320. So the transaction price is always the package price. That is all the customer pays. Okay. Then we now have to calculate the discount incentive standalone selling price. We're gonna use those we're gonna use those estimates that they spoke about so that we'll be able to calculate the value we are looking for. So they said we're expecting them to buy 15,000 tons at 395. So in the future, we're expecting them to buy 15,000 tons at 395,000 each. That's 395 each per ton. All right. And then there is a 90% chance. So we are interested in the 90. The other 10, we're not expecting them to use the discount. So we're not interested in that. There's a 90% chance that they will use the discount as we have stated. All right. Now remember, 5% is going to be given as marketing to everybody. So the difference between 5 and 20, that will be the 15. Let me just show it here before somebody asks me how come. Right. So make a big bracket. So the price of the discount incentive will then be the 15% of this sale that we're expecting in the future. So 15,000 multiplied by 395, multiplied by 90%, and then multiply by 15%. So I'm getting 799,875. Please confirm the figure. Somebody please confirm.
It's correct.
Right, then we get the total standalone selling price, which I'm going to add now. 3.2 plus 799,875. This becomes 399,875. Right, so I would then use this to do the allocation, to get the allocation percentage. Right, which is done this way. So I'm taking from transportation cost, I'm taking this figure over the total multiplied by 100. So I should have 100% here. So it's this figure divided by this multiplied by 100. Okay, so 3.2 million divide first, divide by 3,999,875 multiplied by 100. Okay, I'm just going to use 2 decimal places. So this is 80%. All right. Yes.
No.
Yeah, bro.
Kisman. Please make me understand why we subtract 5% from 20%, because paragraph 2, the English here it's giving Jamaican. I'm struggling to understand, honestly.
Okay, paragraph 2.
Where it says, in terms of the contract, the Zamalek cannot use the 5% discount in addition to the...
Yeah. So the issue here is the fact that it cannot go above what was already stated.
So that's why we are lessing it from 20%.
Yes, because every customer will get that 5%. If we use 20%, it means every customer is going to get 5, and then they'll get 20 again, so it will become 25. Do you see that?
Okay.
Yes, they are not supposed to go above the 20. Everybody else will get the 5. You see, that is why we're removing the 5, so we are left with 15. It must not be an addition. There must be no addition to the 20.
Okay. I think they should have used a different way.
Yeah.
Yeah, because
I agree with you. It's a little bit tricky. But I think if you think about it too much, that's where it becomes that.
Okay.
But it's not very straight. I think I would have to agree with you. It's not very straight. Like, it's not in your face, Not in your face. Okay, so here we are. So that will be, this will represent 20% of the transaction price, and this will, of course, represent 20% of the transaction price. So I will then use this percentage to get the allocation of the individual performance obligation. So 80% of 3.2 goes to the transportation cost. Guys, I hope you are following me, ne? I hope we are moving together. Let me just use a different color here. So 2,560,000. What did I do? I took this percentage multiplied by the transaction price, the package price. Okay. And I'll do the same with the other one. So this is 640. Right. So this table, normally when we have more than one performance obligation, we use this one so we can get the allocated percentage. All right. Then when that happens, we now go into our journal, or what would say, how would have generalized this. So let me just put this in a journal so it can make sense before we look at deferred tax. Deferred tax is not the problem. Deferred tax, I just need my liability and my assets. So once I pick up which one is my liability and my asset, then I'm sorted. Right. In this case, if I have to generalize this, right? So I'm receiving money, so bank, from the total, from the package price. I'll receive money, right? Then I make my sale revenue only the ones where performance obligation was satisfied. So the customer got their product or whatever the case is. So it was complete, like we said. It was for the transportation. The revenue of transportation was completed. So that's the only value I'm going to use as my sales. Then this incentive only comes into work in the third quarter. So for now, this is a contract liability. The 640. And like I said, guys, when you're dealing with percentages, just take note that it may make our balance not to be exactly like what they want, especially if they are silent. Because I can use 2 decimal places, they use 4 decimal places or 3 decimal places, and it may make my figure not to be exactly the same. I think I've mentioned it somewhere there. So whenever you're working with percentages, it's best to use 4 decimal places, It's best to use, that's the safest you can go, but first check what do they want. What do they want? Okay. Right. So my contract liability here, that's a liability which is going to have, of course, a deferred tax element. So I'm going to call this, okay, this 9, let's call this calculation 10. So if I have to calculate my deferred tax, remember they didn't want a calculation, they wanted a note. I'm just going to do the calculation quickly and then we'll do the notes because the notes is not a problem. So deferred tax, temporary difference, tax base, carrying amount. So the only item we have here is contract liability. All right. And then the value is 640. Tax will not have any value. Okay, tax does not agree with this. This is an accounting principle. 640. My tax is at 27%. So I'm going to calculate 27% of 640. And I'm going to get 172,800. Right, so this is a liability carrying amount being bigger than the tax base. It's a deferred tax asset. So that's my calculation. And then I can come to my notes. Actually, my note was supposed to be somewhere closer here. It was supposed to be somewhere closer here. I'll just put note number 2. I'll just continue. Note number 2, deferred tax. All right. So in my deferred tax, we have here our rent. Okay. And then we list our items. What is this one called? Contract liability. And there we are. We had 172,800, which is an assets. Okay, and then we sort it. Okay. There isn't much that needed to go there. All right, so that was the deferred tax. Do we have any question on that? Guys, one thing I've noticed, they really love revenue, okay? They love revenue. Please make sure you understand revenue. It's as if every test has revenue. If it's not coming in a journal, it will come in a note like this or in a discussion somewhere, but it's coming somewhere. So please make sure you understand revenue. Right, so B is done. We are on C. Hey guys, remember D, you do this D as homework. This one is just a general knowledge thing. I don't think it's necessary for us to do it in class. Right. Okay, let's look at C. Critically discuss. Oh, before I move on, guys, do we have any question? Any question on revenue? Okay, I'll move on. C, critically discuss whether the correction of error. So here we're looking at the prior period error, right? Correction of error note as prepared by the junior accountant of Masana Transport Limited for the financial year ended 30 June 2023 is correct and complete. So we are looking for two things. Is it correct and is it complete? So by complete, we are looking for things that are omitted. We are looking for things that are missing. By correct, we are checking what was done to see if it was done correctly according to the principle. Okay. Then it says the junior accountant correctly classified the lease with Dynamo Trans Limited as operating lease. Where relevant, substantiate your critical discussion by stating the correct accounting treatment or disclosure requirement as prescribed by the requirements of International Financial Reporting Standards, AFRIS. You do not have to include corrected calculations in your discussions. Do not discuss the castings and cross-castings of the corrections of error notes. Do not discuss the consequential effect of any error identified. Okay. And then they give you an extra 1 mark for logic. Like I said, they always give this mark anyways. So let's go and check out this error that they are talking about. So the error, I believe, has to do with the fleet of vehicles. Okay, so let's read. So it says on 1 July 2020, let me even see, is it still recording? Imagine if this thing is not recording. Just imagine if it was not recording. Okay, it is. Right. On 1 July 2020, Masana acquired a fleet of 5 trucks to use in its operations for 1,450,000 each. The purchase price of the entire fleet was paid in full, and the fleet was ready for use as intended by management on acquisition date. Each truck was estimated to have a 5-year useful life and an insignificant residual value. The estimated useful life and the residual value remained unchanged throughout the period. On 1 July 2021, Masana's directors decided to lease out the fleet of trucks to Dynamo. So we are basically, the company is the one leasing out. Okay. So it's the lessor. So they decided to lease out the fleet of trucks to Dynamo Trans Limited from 1 July 2021 up until 30 June 2023, which we are now, due to the continued strike at the Richards Bay Port Terminal. According to the lease agreement, Masana would receive a lease payment amounting to 1,980,000 paid annually in arrears. The lease payment will increase by 10% each year. Ownership of the trucks will not transfer to Dynamo at the end of the lease period. Masana incurred 250,000 initial direct cost at the inception of the lease. Right, so here we're still talking lease. Basically, from every indication, we can see this is not a finance lease. Why? Because they are increasing payments. They're increasing payments. There is no interest that is charged. They're not charging interest. They're just increasing payments. It's a fixed amount that is just being paid, and ownership is not being transferred. So this is already going the direction of an operating lease. And they did mention on the question that it was correctly accounted for as an operating lease. Masana appointed an AFRIS specialist during the 2023 financial year to ensure that all accounting transactions are accounted for in accordance with International Financial Reporting Standards. In a meeting held with the junior accountant of Masana, the AFRES specialist discovered that the entity has been incorrectly accounting for the lease with Dynamo. The junior accountant confirmed that she accounted for the lease since inception, therefore as follows. No trucks were derecognized, which is correct. So guys, if this is an operating lease, we do not derecognize. Operating lease, the asset remains with the lessor. We continue to account for it as if it remains with the lessor. Although somebody is using it, it's more like they're just renting it. They do not take ownership. They do not even account for the assets. Only when it's a finance lease. With the finance lease, we actually treat it as if we sold the assets. Okay, we actually have to derecognize the asset, and then the lessee begins to recognize the asset. It's not the case with an operating lease. With operating lease, the lessor continues to recognize the asset and continues to calculate depreciation. All right, so no trucks were derecognized. This is correct because it is an operating lease. This is correct. Right, then we continue. No depreciation was recognized in the truck. This is wrong. An operating lease, we continue recognizing the asset, so we must account for depreciation. And the depreciation must be accounted in two: on cost plus on what is this one called? Initial direct cost. There was a direct cost here, the initial direct cost, IDC. So the depreciation must be depreciation on cost and depreciation on initial direct cost. The one on cost uses useful life. So the one on cost, we're going to use useful life. And then the one on initial direct cost, here we use, let me just put the I. Here we use the lease term, lease period. Okay, so there are two depreciation that must be calculated. Guys, I think I'm already answering the question like this. There won't even be need for me to write it again. So, okay, let's continue. So depreciation was supposed to have been accounted for from the beginning, from 1 July 2021. Then the lease payment, so they said the lease payment of this was recognized as income in both 2022 and 2023. So this is also incorrect. All right, this is incorrect. So you must recalculate the equalized. So you must recalculate equalized lease payments. All right, so that's the value used. So we use the average value, basically. The average. That's the one we account for as income, not just the amount that we see. It has to be the equalized amount. And in the equalized amount, this must include the increase. Include the 10% increase per annum, like they said. So if we take that amount as is in all the years, then it is wrong. Okay. Also remember, okay, I'll talk about that area later. Let's just, yeah. So this is what I'm putting in. Guys, you can put this as points. I think I'm already answering it. Then let's continue. The initial direct costs incurred at inception of the lease were immediately recognized as an expense. This is very, very wrong. Very wrong. This is not supposed to be recognized as an expense. This is supposed to be capitalized to the cost of the asset. That's why we have depreciation there. So this must be capitalized and not expensed. Okay. It's become part of the cost. It's not to be, it shouldn't be expensed. So that's those are some of the mistakes already. Then we go on. Masana accounts for vehicles in accordance with the cost model and depreciation provided for on the straight line method over estimated useful life of the assets. The Alfred specialist requested the junior accountant to prepare a correction. So she was told to prepare a correction of error notes in relation to the accounting of the lease between Masana and Dynamo, and the following notes was presented by the junior accountant at a finance team meeting. Correction of error notes. All right. Normally it's supposed to be called prior period error, but I think they can also take this prior period. error. Because it's errors not for the current year, but for the periods before the current year. All right. Then during the 2022 financial year, expenses and incomes relating to an operating lease were incorrectly accounted for. The description is fine. We can take that. All right. So the description seems fine. So remember, you have to also tell us what is good and what is wrong. Like here, when we talk about the tracks not being de-recognized, that one was okay. So here, the description is also fine. We'll do the title. We fix the title. Then this is the current year. This is wrong. Okay, remember it's prior period error. This is supposed to be errors of the past, where the financial periods were already closed, not the current year errors. Errors of the past, right? So here, including the 2023 items, it's incorrect. Supposed to be 2022 here, and then 2021, because this error started a long time ago. If you go back the story, okay. Then it says the effect on the statement of comprehensive income, all right? Then it says increase in depreciation. Yes, remember he was not accounting. This person was not accounting for depreciation. So by saying that there's going to be an increase in depreciation, this is correct. All right. We are told that we don't need to redo the calculations, but although it is correct, it's not complete. It's correct, but not complete. Remember, there must be depreciation also, not complete. Include depreciation on initial direct cost as well. And I think I explained here over the lease period. It should also be included. So that one is not included. It is correct, but it's not completed. They have to include this as well. Then if there is an increase in depreciation expense, there's going to be a decrease in profit. That is correct. Tax is missing. So tax effect is omitted. So there was supposed to be text in between as well, the effect of tax. Okay. Then when you go to statement of financial position, there's going to be decrease in PPE because of the what is it called? Depreciation. That is correct. Decrease in equity, it will be the same value. And again here, the effect of deferred tax. Deferred tax effect is missing. It's omitted. Right. Then they didn't talk about that equalized payment that we're talking about here, and how the effect of it here also on the note. We're supposed to also have the average payments. It's omitted. I'm just gonna put this here. Average payment is omitted in the notes. Okay. And I think that's it. Those are, yeah, so you have to talk about it in detail now. Tell us what is right, tell us what is incorrect, and tell us what to correct. But I think I've really touched on it, guys. I've really touched. Now you just have to put it in proper wording. You can even put it in the table. You can say, maybe you can say correct aspect. The next table will be incorrect aspect, and then how to correct will be your next table. Then you just be doing it line by line, line by line. Okay, but I think I've touched on every matter that needed to be touched on. Any question, guys? Questions?
So we are moving on from this question. Or you still going to do calculations?
No, remember we told we don't need to do calculations. Says where was that? You do not have to include corrected calculations. You just have to talk about the problem. That's it. Don't touch any calculation. Just tell them that I don't see the 10% depreciation was not done correctly because they do not include this. That's it. So yeah. Questions, guys, questions. Guys, this is the best question to practice from, seriously. but not this alone. Include also the previous one that we did, the previous revision. With those two, just focus there. Just focus with these two. Make sure you understand them in and out. I think you'll be fine. Okay. So that was
Naomi,
that. Yes.
please don't forget to send us the screenshot of the notes.
Okay. I will do so. I'll do so. I'll do so. Okay, the last ethical concern. I'm just gonna read it, but like I said, this one you guys need to think, I'm just gonna read through the story. So it's this one has to do with employees' benefit. So you see, employee matter, but they didn't want to test employee benefit like a benefit. You see. So they had it there in your head. I'm sure you were ready to calculate employees' benefit. When you saw this, you're already thinking of bonus, what. I think that's the one we didn't do today, So please, you see, we didn't touch on employees' benefit on this question. Please, you can also go back on the employee benefit questions if you know you're not very good with employees' benefit. Also, have just a look. So employee benefits, what are you looking for? You're looking for your gross salary, all right? So you need to check in my gross salary, do I have any increase? Do I have any person leaving the company? Do I have new people joining the company? All of that is going to affect the gross salary. How is the gross salary given? Is it given per month or is it given per year? All right, is it given per person or is it given for everybody? What I need is the gross salary for, I need the gross salary for every employed person during the year, for the full year. Okay, so you need to look out for those things, increases and all that. So that's a gross salary. Then you need to look out for the movement in bonus. Am I even given bonus at all? If the company pays bonus, so I need to check, does the bonus fall within the year? Is there a shortfall? Because the bonus must be spread throughout the year. So if my bonus is paid, for example, my year ends in December, but the bonus is paid in October, that means November and December we did not account for bonus. So there's a shortfall. We have to create an accrual. All right. Also, was bonus paid in full? So sometimes they'll say they don't have enough money, they paid only some and some will be paid later. So that is also accrued. So what you need to get your movement, it's bonus paid for the year, plus current year accrual minus prior year accrual. Also check the increase. Remember, we're basing the accrual on the rate of the next period. The next period rates. All right. So you have to look at all of that to get your movement. You do the same with your leave. Remember, with leave now you have to check the leave we want is the one that has not been used. The unused leave days which are expected to either be paid or to be transferred. Those are the lease that we are looking for. All right. Not the one that has been used. If it has been used, it's not our problem. It's only when it's not used. We now have to check what does the company policy say about this. The company policy could say if somebody does not take their leave days, they can transfer it to next year. So if they're transferring it, we are going to base our calculation on gross profit plus other contribution. In other words, cost to company. So I'm going to take the gross profit, I'm going to add any other contribution that it is on it. Then I calculate my unused leave days that I transferred. If they say the company is going to pay you, then you base your calculation straight on gross profit of the current year, using the rate of this year. If it's being paid this year, use the rate of this year. But if it's going to be an accrual, I have to use the rate of next year. So if next year has an increase or expecting to have an increase, I must also use that in my calculation. That's what you do with leave. So check those leave days that are expected to be taken, although they're not taken. So always look out for that. So if they say 10 days are transferred, we have to now check from the 10 days, are we going to use all the 10 days? How many days from the 10 days are expected to actually be used or to be paid? Okay, so you look out for that, then you get your movement in leave as well. Remember, all I've been explaining is for short-term employee benefit. We've got 4 categories. We've got short-term employee benefit, we've got long-term employee benefit, we've got post-employment benefit, we've got termination benefit. Termination benefit is when somebody is leaving employment and we are paying them maybe the last pay or something like that, or a benefit or anything that comes with it, especially if we are removing you from the workplace. let's say we are cutting down employees, we usually have to pay them some package, all right? That package forms part of the termination benefits. Then post-employment benefits is that benefit that you continue to enjoy even after you've left work, like your pension funds, your provident funds, things like that. Long-term benefits is just it's also can also be medical aid and things like that. It's those benefits that will last for longer than 12 months. Although that one is not high, it's not really tested. They don't really test that long term. They only test either short-term benefit, post-employment, and termination benefits. The long-term benefits is not tested. Okay, so I think I gave you guys a summary of the employee benefit. That is the topic that we didn't touch on today. But anyways, let me read what this is all about. So it says here, for the financial year ended 30 June 2023, Masana's total annual net salary amounted to 3,500,000. Whilst Masala withheld a total 650 employee tax payable to the South African Receiver of Revenue, SARS. In the recent executive management meeting held on the 3rd of July 2023, the chief financial officer, who is a registered chartered accountant, proposed that the employee tax payable on SARS withheld for the month ended 30 June 2023 should be used to fund the performance bonus of the executive management. He added that it is unlikely that SARS will query the non-declaration and non-payment of the withheld employee tax if it does not happen frequently. Okay, so this is a CA advising the company to actually not comply with the law and legislation because they're supposed to have paid these payee or employee tax on behalf of their employees to SARS. So he's saying, no, let's rather use this money to pay bonus. Let's pay them bonus. And then because it's a once-off something, it's not a frequently done something, we can get away with it. SARS may probably not fight us or notice or anything like that. Okay, so that's what's happening here. And those are the questions that they're asking you now to give concerns, the ethical concerns that this person who is meant to know a lot because he's a CA, AC, is the one advising the company to do so. Okay. So guys, yeah, that comes to the end of our question. Do you guys have any question? Please do ask. If you have any question, not only related to this question, any other question, please do ask. I know we've been here longer, but please let's hold on a little bit. Please ask your question.
Hi Naomi.
Hello.
It's me again. Yeah, I wanted to know, can we have, say, maybe a session Monday after writing? Maybe just more like a bootcamp review. What is this? Revision or so. Another one, but something similar to this one. Because like this one, I definitely want to reattempt it myself. After having to look at this recording.
Okay, on Monday, we have our classes on Monday every 7 p.m. Yeah.
Okay, then that's all right. Thanks.
And
That's settled.
and because of time, we'll have to move on it. Because of time, because you guys will have another test or whatever exam coming soon. And then it will include more topics. So I think the next class will have to continue where we stopped the groups. Because that will be the next one that will be tested. But yeah, we'll see. We'll see how it goes. Okay.
Yeah, I want to understand something, but by the look of things, I don't see this coming. But for the sake of understanding,
Okay.
going back to income taxes,
Yes.
which we are struggling to understand when they say, more especially in IS 8, changes in accounting policy and estimates. They used to say the SARS will open books.
Okay.
And I know you told us this thing many times, but we are still not getting it.
SARS will open or SARS will not open, right?
Yes, we want actually the effect of that. What must we actually do when we come across such a situation?
Okay. Right. So what happens in that situation is that first of all, we need to come back to the core of deferred tax. What causes deferred tax? Let me just write. I think if I write in a clean page, it will make sense. Right. So what causes deferred tax? Let's come back there. How did we get here? Where does this come from? Okay. So what causes deferred tax? Deferred tax is an effect of temporary difference. It's an effect of temporary difference. And what causes the temporary difference? Is disagreement in treatment or principle, between two parties, between accounting and tax. Okay, so for us to have this, we have to have here. We start here. This is our starting point. This is where the problem begins. So this problem will begin from here. It creates a temporary difference. From there, we can calculate deferred tax. So we are now dealing with changing accounting policy, whatever. And then we are told, okay, we are in accounting. We used to have, for example, inventory. Let me use inventory. So in accounting, we had inventory in 2021. That was 1 million. And SARS had agreed with that. So them also in 2021, they had 1 million. So we were all good. We didn't have any problem. Come 2022, maybe we bought more inventory, we have 1.5. SARS is also happy. It says 1.5. So we are happy, both of us. Then we come in 2023 and say, no, but we don't agree with this valuation is not giving rights. The valuation of this inventory is not effective. All right, it's not giving us the right balance. We want to change it. So we, in accounting decides to change these balances. Remember, we use retrospection, retrospective application, meaning I'm going to change 3 years, right? So I'm going to change this year, I'm going to change this one, I'm going to change this. But SARS and us, we were agreeing before. Until accounting decides to change this, for whatever reason. So SARS now will have to come and say, okay, but why are you changing? That is why we do the note. You must explain why we are changing, all right? So accounting will come here and do an explanation. They will explain now the reason behind the change, the reason. They explain the reason. Now, remember, SARS must always win. Tax must win at the end of the day because we are going to pay tax. All right. So if tax is going to win, now they have to see our explanation, say, you know what? In this explanation that you are giving us, we either agree. If we agree, it means it goes back here. There's no disagreement. There's no defect. There's no temporary difference. There's no deferred tax. Guys, 1 minute. Okay, it's like I was saying. So SARS can either agree with this explanation, with what you're saying, and then they will change along. Because if we change here, these figures will change. So they can say we are accepting we are reopening. If they use the word reopening, it means they had the balance already, right? So for the previous period, If they agree, they will reopen previous periods. Okay, they will also accept, this is for the current year, accept the new policy. So in this situation, there's no disagreement, so we can't talk about this here. We can't talk about temporary difference, we can't talk about deferred tax. If they agree, there is no deferred tax. Principle is there's no deferred tax. The only thing we'll do is to adjust the normal text, adjust current text. Any text effect, just adjust current text, no deferred text. Right. But if SARS comes back and say, but no, I'm not agreeing with this, your explanation. I don't see why you should change. I'm not going to change mine. All right. So they disagree. The moment there's a disagreement, we come back here. What causes deferred tax? Disagreement. Then we go back to the process, temporary difference. Then we go back here, deferred tax. So once that happens, if they disagree, they would say they will not reopen previous periods, or they will not accept new policy. Either ways, so what we're trying to say, either ways, whether they agree or disagree, text is going to be affected. But which text? If they agree, it's the current text. If they disagree, this is where we're going to now adjust deferred text. Because there will be difference in balances, meaning the temporary difference. Meaning the temporary difference. Okay. Hey, I think I went overboard with my calculation, with my explanation. I hope it helps. I hope I did not go too much detail. Do you understand now, or is there more confusion, or please talk to me?
No, I'm following. So I want to understand in terms of the preparation of what do you call the effect of this change when they say we are going to reopen the previous year's books. It means we have to show the effect of this change. Am I right?
Yes. The thing is, because there's a change, we have to show the effect. It's not even depending on the decision of SARS. I think the decision of
Yes.
SARS is only on the deferred tax, but the effect must be shown.
The decision of SARS affects only the deferred tax calculations.
Yes, only.
Yes, I want to understand that part, that if SARS disagree, it means we are just going to follow the new method, and will just flow just like that. And then if they disagree, there will always be difference. And then how do we work that one out?
Okay. So it really depends on what is the question in front of you. Okay. I think it will help if I see the question. If the question, it depends on what the question in front of you. What are you doing? Are you doing a deferred tax calculation, deferred tax note, or are you doing change in accounting policy, errors, or what? So it depends on what exactly are you doing. Okay. So if, for example, I'm doing change in accounting policy, all right? So we know that change in accounting policy. So let me just give my alternatives. Let's say I'm doing change in accounting policy. Right, changing accounting policy. I have that profit and loss section. I know it's not put like that, but I'm just gonna put it for the sake of understanding. I'm gonna have 3 years, right? So I know that is going to be a decrease in cost of sales, usually. Decrease in cost of sales, increase in income tax expense, increase in profit. Right, then my SFP section, increase in inventory. Then, if SARS agree, let me even put here agree. If SARS agree also to change, right, then there's going to be increase in current tax liability. If SARS disagree to change, there's going to be an increase, not in current tax now, but in deferred tax. Okay. Then everything else continues as normal. We're going to increase.
Now you have provided more clarity.
It's more clarity there.
Yes, we're actually confused in this part because it was the same thing, whether they agreed or disagreed, we're doing the same thing, and we know that we are actually doing wrong things because there is something that we are not following.
Okay, but you're fine now.
Yes.
Okay, perfect. Yes, Clive.
Okay, I also have a question, especially for instance, on the changing accounting policy, whereby you get they say the company moved from weighted average to relative fee, for instance, and then when you look at the value increased from weighted to fee, but then when you come to this note, they'll tell you that it's a decrease in cost of sale. I want a clarity, but then when you look at the figures, there's an increase, but then when it comes to cost of sales, they say it's a decrease. Can you please clarify that for me?
Okay, so the increase is on the inventory, ne? Cost of sale is being an adjustment value. It's the control account. Okay. You understand what control account is, right? So cost of sales is being the
Yes.
control account. It's more like, you know, when we like all adjustments that is has to do with inventory will usually go to cost of sales. For example, when inventory is written down to net realizable value, it will go to cost of sales. All right. When inventory increase, as long as it's not a cash transaction, any adjustment that is made on inventory will go to cost of sales. Okay. So when it is written down, it's gonna go more expense. When it's written up, it's gonna be less expense. All right. So think of it like that. If you think of inventory written down as a loss, you see that the expense will be higher because that loss is treated as an expense. Right. In this case, inventory has gone up, but it's not gone up because we bought. We didn't buy. It's principal. It's principal that made it go up. Do you understand? So on the other side, it's now the cost of sale is now becoming less because the inventory is going up. The adjustment is an upward adjustment. So that up, it moves on opposite direction. They are moving on opposite direction. If inventory goes up, the cost of sales goes down. If inventory goes down, cost of sales goes up. So it's on that aspect. I hope this is clear. Live?
Thank you so much. Now it makes sense to me because I was asking myself, how come the value increases? I mean, the stock increases in value and then the cost of sales goes down. But then when you explain them, then it makes sense to me now.
Oh, all right. Cool. Any other question?
Yes, another one. Since we still have a couple of minutes, almost
Yes.
20 minutes. You said we are going to be here until 8.
Yes.
Okay. Taking you straight to IFRS 16 leases.
Leases, yes.
I saw this other question where they given us the market-related interest rate. And then, so usually when they give us market-related interest rate, we must determine we must calculate the present value using that market-related interest rate and see how much is our present value using the market-related interest rate before we can calculate the internal rate implicit in the lease. So I don't know if I need more
Yeah, definitely
education
you
from
need
that.
more. You definitely need more. Katleho, you need more. Lease is very broad. I don't even know which one to touch now because there's a lot of principle that is left
Okay,
out,
let's
ne?
go. Let's go in the books of Lease and the finance lease, and then
Okay, I want to show you
in the
something. Let me
effect.
just see if I can. Let me see if I can find it. I want to show you something. The thing is, it's not always interest rate implicit.
Mm.
Let me just look for it, ne? It's not always interest rate implicit. So you have to check first. Are you working with the books of the lessee or the lessor? All right. If it's the lessor, you have to ask yourself another question. Is this a general lessor or is this a manufacturer or a dealer lessor?
Okay, the question that I'm talking about is in exam pack 3, the one that was sent to us. I think it's question 2 or 1, somewhere there.
Question 2. Okay, wait, hold on. I'll check it. I just want to show you something. I'm looking for it now. I don't know if I still have it here. I want to share it with everybody before we go even there. One thing I've noticed with Lease is it's easy, but it has a lot of Lease has a lot of principles. And if the principles are missed, you may really struggle with leases. All right. So, like I was explaining there, so you have to ask yourself the question. Don't worry, I'm looking while I'm explaining, I'm looking for what I want to show you. You have to ask yourself the question, is this the lessor? If it's a lessor, is this a normal lessor or is this a manufacturer or a dealer lessor? A manufacturer or a dealer lessor will lease what they sell. They will either lease their stock or they will lease their whatever they're making. Let's say they make cars, they would also lease that same car that they're making. So that one is not a normal
Yes.
lessor. When that happens, we do not use the interest rate implicit. We don't. We use the market related interest rate. Right.
Okay. So,
Yeah, you get. So that's where why am I not finding this? That is where the catch is. So when I see market related interest rate, it must be that I'm dealing with a manufacturer or a dealer. A dealer means it's their stock that they're leasing. A manufacturer means it is the product they make that they're leasing. So I have to always understand what is the nature of the business. If I am leasing, if for example, I am I am a Pick and Pay and I'm leasing out a car, then it's okay. Pick and Pay does not sell cars. So that one is a normal lessor. That is where we use the interest rate implicit. But if I am Toyota, I'm a Toyota company and I'm leasing out a Toyota car, then I'm not a normal lessor. I'm a manufacturer or a dealer lessor. That one, I don't use the interest rate implicit, but rather I use, I use the market related interest rate.
no, you actually clarified me, because you know what I did? I failed to identify, because I said those people are manufacturer or dealer, so that's why I used the market related. Unfortunately, those people, they were not manufacturing or selling those the assets that they are leasing out. It's actually a general lease.
A general lessor. So you don't use that what do you call market
The
related
market
interest.
related.
So you just go straight to calculate your interest. What is it called?
Your
What
internal implicit in the
IR?
lease.
Yes, interest rate implicit. Yes, that's the one you would use. So you have to study the. Why am I not finding this? You have to study the type of business they do for you to know which one you are using. So in that situation, I need to show you these things. I've done this in a table format to help people. I don't know if I've deleted it or what. I don't understand where this went to now. The way I did it in a tabular format, it's meant to simplify these situations. Okay, I think I found. Hey, but now I wrote over it and on it. Okay. Let me show you. I'll get a better one. I'm sure I've done a better one somewhere. Let me share it with you. So Lease is all about, please remind me to share some of my Lease videos with you guys where I did leases in detail. Just remind me. Right, so I did something like this. Right, operating list, there wasn't much. I don't really want to, yeah, this is the example I was talking about. Okay, this is the example I was talking about. So you have to ask if it's a lease. Can you see my screen, please? Can you see my screen? Okay. So first of all, ask if it's a lessee or a lessor. Then when you ask that, ask if it's a normal lessor or a manufacturer lessor. How do we know that? So I made an example, right? I use Pick n Pay and I use BMW. So for BMW, if they giving out a BMW truck, it becomes an inventory for them. For Pick n Pay, it's a PPE, right? Which I'm not going to get too much in detail now. The one I want to talk about is this. There's the table. I know I wrote over it and everything. This table is very important. So this table tells me what happens to my assets. Like if it's a leasee, I'm gonna have rights of use of assets. I create one. If it's a normal lessor, I'm leasing out, so I have to de-recognize my assets. If it's a manufacturer or dealer lessor, I'm leasing out what? Inventory, not PPE, but inventory. Do you see? Then initial direct cost, what happened? If it's a leasee, I am going to add this to the right of use. If it's the lessor, I'm going to add this to the PV. If it's a manufacturer or a dealer lessor, I'm going to expense it. It's a normal expense. Then comes interest. This is where we are talking about. Comes interest. With interest, if it's a leasee, I use the interest rate implicit. If it's a normal lessor, I use the interest rate implicit. If it's a manufacturer or a dealer, I use the market-related interest. All right. And if the interest rate is not known, they can give me incremental borrowing cost, but they must tell me it is not known. Okay. So I guess this is just as much as I can give you for now, but I can send you some of the recordings where I've done leases in detail. Just remind me so it can help you. Because lease is about principle. There's a lot of principle in lease, but if you grasp, you are done. You are settled. And also just send me that you said question 3.
Let me open it on my side. It's question 2 of study pack 3.
Study pack 3, the last one, last one, eh?
Yeah, the recent one.
Okay.
Where it's contract with Ready Logistics. I think we were given 12% market related interest rate.
Okay, I think I would have to look at that. Let me see if I can open it also. I think it makes sometimes things make sense when you're looking at it also. Because now you're talking is like you are right now, I'm just hearing you, but I'm not seeing the question. You said pack 3, question 2.
Yeah, question 2. Contract with Ready Logistics.
Ready Logistics. Okay. I think mine is different to yours. Wait.
Exam pack of 2024.
Oh, is it the 2024? No, I don't have. Please send me.
Oh, you don't have?
No. I'm looking at 23. Send me that one, please. Because this one doesn't have Ready Logistics you're talking about.
Okay, let me share it.
Send it on WhatsApp. So I can save it also.
At live, you can try to share also from your side.
Okay, guys, yeah. I think now it's me and you people are just tired.
Yeah.
Okay, Katlego, let's just talk out of here. Yeah, let's just talk out of here. Send me the paper. Send me the study pack. And please just send me everything, all the study pack you have now, because it looks like the 2024 is different to 23. Please send me all of them.
Study pack 1, 2, and 3.
Yes, send all 3.
Okay.
Okay, guys, thank you so much for joining. Please, let's give you time to rest and some of you to study. Some of you have not started studying. You can start studying now. Go through this question that we worked on. Go through the previous revision question that we worked on, and of course some of the questions on the study guide. And yeah, if you have issues, please do communicate on the group. I'll also be there to assist. Okay, thank you guys. Enjoy the rest of your evening. Bye.
Bye.